with that in mind. Manus Granny, thank you very much. Manus Granny on the ground, reporting on the ECB today. Coming up here on this programme, UBS is boosting pay for junior bankers following rivals in trying to retain younger employees. We bring you the details next. This is Bloomberg.
Estava há um ano sem se apresentar, as escolas estão começando a reabrir, os teatros não vão reabrir tão cedo. Aí a gente teve a ideia, no melhor estilo Minuto Nascimento, vamos levar a música aonde o povo está.
Minha missão hoje é fazer as pessoas sorrirem, cara. Sorrirem, olharem da janela, verem uma coisa inusitada, ficarem felizes, mandarem pros amigos e, enfim, curtirem um momento diferente, mesmo dentro de casa.
Billionaires in space?
What defines going to space?
There is a level where you
It's
get...
the common line?
It's a common scientific theory, 53 miles, 62 miles.
I think that it's just being able to float around and then suddenly you feel like you can say you've been to space.
Zero gravity.
Zero gravity.
Surveillance correction right now. John and I went to Wikipedia. The Kármán line, John.
Yeah, the thing that I mentioned and you carried on talking and ignored me.
Stay grounded with Bloomberg Surveillance. Weekdays on Bloomberg Television and Radio.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
Welcome back to the European Market Open. 23 minutes into our trading session, where we are a little bit behind things here in London, a little off the pace. We are up, but just up 0.1% elsewhere. A little stronger to the upside. The DAX certainly 0.9% higher, so we are higher all in all in Europe. Sorry. Let's think about where we are on the banking story right now. UBS is the latest lender to boost junior banker pay in an effort to retain younger employees amid increased competition from buy-side and tech firms and crushing workloads. Of course, we've heard a lot about that from a surge in deals. Joining us now is Tom Metcalf from our banking team. So, Tom, what are the details then of what UBS is doing, its sweetened pay packet for first-time analysts?
Yeah, exactly. So they're aligning with sort of rivals like Deutsche Bank, Citigroup, Barclays PLC, and effectively what they're doing is giving their first-year analysts sort of a baseline pay package of $100,000. So that's about an increase of 15 grand, which is pretty typical across the sector at the moment. As you point out, these banks are looking around trying to work out how on earth are we going to keep our young talent, in a world where they're sort of working even harder than they used to be, and sort of motivation is pretty low.
Yes, indeed, and they might be lured to other opportunities. I'm reading a piece here by Marcus Ashworth, one of our colleagues on the opinion team, that says Wall Street bonuses won't win over young talent. That's his view. What are you hearing?
Yeah, it's really interesting. Obviously, this is one way to try and keep kind of young talent around. But as Marcus points out, the problem is the pandemic has accelerated this. As people are really looking at kind of more like lifestyle choices, and if you're sort of a young, ambitious person, you might weigh up tech, for example, or go out and do your own thing, just because there you have a better lifestyle, and B, fundamentally the long-term returns on being in a tech company or being a startup entrepreneur, vastly exceed the extra 15 grand you might get, in your first year in banking.
And let me ask you about other news in banking, because we seem to have been having this sort of drip of news about people leaving Credit Suisse. What are the latest details on the exits at CS?
Yeah, another bank has reported to have left from Credit Suisse. I think this brings the total exits to something like, several dozen at this point. And, that's reflective, not just obviously what we're seeing with other banks in terms of the really hard hours, etc., but it's much more to do with, Credit Suisse's own problems it's battling, whether it's the Archegos fallout or its involvement in Greenfield Capital. So what you're seeing is a lot of poaching, and, senior bankers there are pretty keen to jump ship and, perhaps move to another place.
Tom, thanks very much. Thanks for joining us. Tom Metcalf joining us there from our banking team. Coming up on this programme, not budging. The EU says it won't renegotiate the Brexit deal governing Northern Ireland, the so-called Northern Ireland Protocol. That's as the UK warns it could suspend the agreement. The UK says it's not working for it. It's not working for getting things from GB to NI. The EU says you signed this deal and we're not renegotiating. It clearly means a lot for business, certainly in the fresh meat category, which is why you're seeing a lot of pictures of that on your screen. But it also has huge geopolitical implications, or could have. We'll talk more about that shortly. This is Bloomberg.
Is entirely online, ostensibly because of the pandemic, but in large part, we're seeing a massive pivot to mostly live streams for video game coverage. We're going to be all online instead of in the convention center for the first time this year, and that promises to be a really different experience.
Industry has really been interesting during the pandemic. It has actually grown substantially since everyone was stuck inside. And of course, this makes sense, right? We're all looking for some amount of entertainment, and stuff like Fortnite in particular offer also a social component, right? People can join up and kind of meet up online and spend time with their friends. So in a lot of ways, this all makes sense.
Trading revenues coming in better than expected. Everything. Cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Welcome back to the European Market Open, half an hour into our trading session. The FTSE 100 flirting with a flat line there, and the other markets in Europe perform a little better. The DAX up by 0.7%. Let's have a look at the sector breakdown then and see where we are across these European equity markets from a sector perspective. This is what we have for you right now. You can see only 2 sectors are in negative territory, most sectors moving to the upside. Let's take a look at some of your movers, though, this morning, because there's some really fascinating individual stories out there. Unilever is one of those, down by 4.4%. A drop in the profit guidance, certainly taking the market's attention today. They're also talking about inflation being the toughest it's been since 2008 and the financial crisis then. Another throwback to the financial crisis is the NatWest news this morning. The government looking to sell down its stake in NatWest. It's been more than a decade, of course, the height of the financial crisis, that we saw the government take a stake in NatWest. It still owns about 54%, but we are getting an update then this morning that they plan to sell some of that down in the next 12 months or so. So that stock down by just over 1%. And ABB, the Swedish engineering business, all costs are going up, but that's not a focus for investors today, it seems. They're able to pass on some of those. We heard from the CEO a little earlier on, 1.7% to the upside for that particular business. They're talking about the IPO they're planning for their EV charging business. Obviously, a hot topic of conversation given the move we're seeing from many car makers, all car makers really, towards EV cars. They say that this is core for the company, so even though they plan to IPO it, that is not a sign of a lack of interest in that particular business. The stock is higher. Let's get a Bloomberg First Word News update. Here's Laura.
Thanks, Anna. President Biden has dismissed concerns that the U.S. will experience persistent inflation as the economy emerges from the pandemic, while cautioning that restaurants and others in the hospitality sector may take longer to recover. Inflation has become a political liability for the White House. Republicans blocked debate on Wednesday on the president's infrastructure package. China's flood-stricken Hunan province is bracing for more heavy rain just a day after a deluge sparked the evacuation of 165,000 people and left at least 25 dead. Videos circulating on social media showed subway passengers standing in chest-high water and cars being swept away as the floodwater poured through the streets. 8 months of rain is said to have fallen in just 24 hours. Chile is starting to offer COVID vaccinations to children under the age of 12 as soon as September. That's as the nation presses ahead with one of the world's fastest inoculation campaigns.
We expect to start vaccinating that population probably around August or September. Now we're vaccinating teenagers, 14 years old teenagers and up.
Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Laura, thanks very much. Laura Wright here in London. Now, the British government has called on the EU to rewrite a deal overseeing post-Brexit trade involving Northern Ireland, the so-called Northern Ireland Protocol. The request comes just a year after it was agreed with the bloc. Brussels has categorically ruled out a renegotiation, placing it on yet another collision course with London. Joining us now is Bloomberg Brexit editor Edward Evans. Ed, good morning once again. So give us a recap here for us. Why is the UK government doing this now, making these comments now about the Northern Ireland Protocol?
Well, if you remember, this is the key concession that Johnson made very early on in the Brexit negotiations to get the wider Brexit deal. And this was to avoid, the key thing was to avoid a hard border on the island of Ireland. And the result was that they agreed to put this trade border in the Irish Sea. So goods coming from the rest of the UK into Northern Ireland face effectively customs checks going in. And this has created all manner of administrative problems, supermarkets saying they can't get goods, Amazon deliveries not arriving, that sort of thing. Now, of course, in Northern Ireland, that sort of degree of separation from the mainland takes an immensely political dimension. Obviously, you have a unionist community there, very sensitive to any degree of sensitivity from the mainland. It's become an issue now. We're only 7 months in now to the protocol being applied, and it's really, you know, these issues have come to a head, and this has been the earliest moment that really the Brits can address it.
So the UK government has put forward a little bit more detail. They're suggesting an honesty system instead, a more light touch system. But the EU is saying this is not up for renegotiation. So what is the EU's point of view?
The EU's point of view is straightforward. This is a deal you signed up to. You need to honour it, and there will be no wholesale renegotiation of the protocol. That said, Maros Sefcovic, the European Commission Vice President, yesterday didn't rule out negotiations within the scope of the protocol, so essentially working within what you've got already. And in that context, you could see some kind of compromise or continued discussions over things like grace periods and actual checks, but that wouldn't be a substantial renegotiation of the sort that the British are seeking.
Right, and where does this head next then, Ed? Because from the sound of things, this is fairly deadlocked unless there is enough room to manoeuvre within the, the existing terms of the protocol. What happens next?
Well, this could go on for a very, very long time. I mean, this was one of the most intractable parts of Brexit to start with. And clearly you've got a situation where one side says it's unworkable, the other side says, well, you've got to live with it. How that resolves? Well, the Brits have said that they could invoke Article 16 of the protocol, which basically allows them to suspend parts of it. So they could conceivably turn around and say, look, we're just not going to implement these border checks. What are you going to do about it? Alternatively, you could see some kind of compromise, or that this sort of negotiation and discussion is the new normal in Brexit, and that Brexit is very far from being done.
Interesting stuff. Thanks very much. We'll see how long it lasts then, these conversations. Bloomberg Brexit editor Edward Evans, still busy on that beat, as you can tell. Now, the Nasdaq has formed a joint venture with Citigroup, Goldman Sachs and Morgan Stanley to establish a trading venue for shares of closely held companies. Bloomberg's Alex Steele spoke with the Nasdaq president and CEO, Adina Friedman.
We've been operating the Nasdaq private market for about 7 or 8 years. However, as we've looked at the evolution of the private markets, companies are looking to really bring more, private companies in particular, are looking at staying private longer, but also being willing and interested in providing more liquidity opportunities for investors and for employees. And so as we've developed this partnership, we really thought about what is the ecosystem we want to create. We want to bring venture firms and early stage and middle stage private companies into the platform. We obviously at Nasdaq have a lot of relationships with later stage private companies. And then we also want to bring large scale institutional investors and draw them into a fair and high integrity marketplace for private company liquidity. And that's why we chose the partners that we have joining us in this venture. In terms of the long-term impact on Nasdaq, in terms of the public markets, of course, we're always happy when private companies choose to go public and then list on Nasdaq, and having relationships earlier in their life cycle, we do think makes us the venue of choice for that. But really, we also see a huge opportunity in the private company liquidity landscape as well. We would say anywhere from 500 million to 1.5 billion. It's hard to know exactly what the total market opportunity is, but it's very large.
Will that marketplace, though, look any different, or how will it feel any different based on the bank's involvement? Do you have a sense yet?
Well, I would say that we have been doing this on our own, but as we have been talking to the banks, they definitely see more institutional investors being interested in private company shares. They've seen the private companies themselves accepting the notion of liquidity as part of their lives as a private company in new ways. And so what we've been seeing over the last year is continuous market programs for companies that might be thinking of going public through a direct listing, auctions, block sales, all of which really the private companies now are getting more engaged in. Whereas before they were happening behind the scenes, now the private companies are saying, let's create a fair and high integrity way, an efficient way to allow that liquidity to occur.
That was Nasdaq's president and CEO, Adina Friedman, speaking to my colleague, Alex Steele. Coming up on this program then, time to step up. John Kerry calls on nations to do more to hit net zero. We'll bring you some of our conversation with the US climate envoy as a G20 climate summit kicks off. This is Bloomberg.
Bloomberg Surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Farrow, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
A global sporting spectacle in the middle of the worst public health crisis in a century. The Games are going ahead, but they've already been described as the weirdest Olympics ever. Given fears a global gathering of about 90,000 athletes, officials and volunteers could become a cauldron of COVID variants, strict measures are in place aimed at stopping a potential super spreader event. Most of the athletes are vaccinated, but they'll still have to test daily and stay in a bubble within the Olympic Village. Socialising and group meals are banned. Win or lose, athletes must leave Japan within 48 hours after their last event. Japan wanted this Olympics to mark a turning point for humanity, a light at the end of the tunnel for a world stumbling through a second year of the pandemic. But those ambitions have crumbled. Tokyo is under a state of emergency through the entire Games. Thousands of athletes are set to compete in empty stadiums with no chance, no fans, no families to offer support. Prime Minister Yoshihide Suga's political fortunes are closely tied to a successful Games, which were supposed to symbolise Japan's recovery from the 2011 earthquake, tsunami and nuclear disaster. But athletes and officials have had to brave a cascade of calamities just to get to the opening ceremony, and an uncertain legacy awaits the entire Olympic movement at the finish line of Tokyo 2020 and could mean a very different looking Games in Paris in 2024.
Bloomberg's Juliette Sarli there with a look at what it took to get the Tokyo Olympics to the starting line. Those Games facing yet another PR disaster today after officials were forced to fire the director of the opening ceremony just a day before it's taking place after a decades-old video emerged of him joking about the Holocaust to get more complexity to the Olympic saga in Tokyo. Let's get a Bloomberg Business Flash then. Here's Laura Wright with all the corporate news flow that you need to know. Laura.
Thanks, Anna. The boss of Swiss engineering giant ABB says more or less all of his input costs have gone up. That's as ABB reported operating EBITDA for the second quarter that beat estimates. The company revised full-year revenue growth higher to just below 10%.
More or less all costs have gone up, and yes, we're transferring some of that to our customer, but also trying to become more efficient in our operations, and that have helped us to actually drive the margins to this record level that we had this quarter.
Saudi Aramco has confirmed a data leak after hackers reportedly demanded a $50 million ransom. The Associated Press had earlier reported that 1 terabyte of Saudi Aramco data had been held by an extortionist, citing a source on the dark net. Texas Instruments fell in late trading after it forecast a wide range for its revenue, the chip maker indicating uncertainty about whether the increased demand during the pandemic will continue. The run-up in sales has analysts and investors concerned about panic buying, which has led to crashes in the past. It's interesting, Anna, because 85% of companies that have already reported on the S&P 500 have beaten expectations, but it's all about those forecasts.
All about those forecasts. Yes, as you say, the earnings season's gone pretty well so far. In terms of read across from that Texas story into Europe, we have Infineon trading flat, ST Micro up 0.8%. So either in line with market performance or just a little under for those chip names here in Europe. Laura Wright with your Business Flash. Thanks to Laura. Now, G20 ministers are in Naples today for a climate summit. It comes amid increasing pressure to agree to meaningful action at the COP26 meeting later this year. US Special Presidential Envoy for Climate, John Kerry, has been speaking to Bloomberg's Francine Lacqua. He said countries need to step up their commitments to net zero.
The measurement of success at COP is going to be very clear to everybody. No, there are not going to be any secrets there. Either the countries come together at COP26 and the developed world particularly, the 20 countries that are the major economies of the world, really need to step up and come up with reductions that can keep the minimal amount of damage possibilities in focus. And that's what the scientists have told us we must do. This is not something any one country is dreaming up. The best scientists in the world under the UN International Panel on Climate Change have said, you guys have about 12 years to make the critical decisions that will avoid the worst consequences of the climate crisis. That was 12 years. That was 3 years ago. So now we're at 9 years, and this is a very critical moment for the COP to take place, because we can come together to help less developed, fragile, vulnerable countries with adaptation and resilience, and we can do what we developed world need to do to reduce the damage being done by our practices of the way we produce energy.
But how likely is it that we keep that 1.5 degrees within reach?
Well, look, the Paris Agreement said well below 2 degrees. That's what everybody signed on to. What is well below? It's certainly not 1.9 or 1.8. It's somewhere close to the 1.5 degrees. And so I think it's very important to do it, because every decimal point of rise in temperature, it is remarkably compounded in the damage that it does. We're at 1.2 degrees today, and you see what's happening. Imagine what happens when you're at 3 degrees or so, which is the track that we are currently on. So it's imperative that countries respond.
Sir, can you talk to me a little bit about the timeline? So of the G20, first of all, reaching net zero, but also phasing out carbon and ending the subsidies, for example, for fossil fuel.
Well, we should be phasing out the subsidies as soon as we can. There's no excuse today for subsidizing the problem. I mean, that just doesn't make sense. I said yesterday that, paraphrasing Einstein, insanity is doing something that kills you when you already know it will kill you. We just need to be smarter than that. So I believe that in the COP we have a choice, which is to commit to enough reduction in 2020 to 2030 that we do what the modeling shows us is necessary to prevent a catastrophic rise in temperature. And we've already seen what's happening at 1.2 degrees. So the road ahead is pretty clear to all of us. We also need to stop funding new coal-fired power plants, because at least move to gas, which is 50% less polluting than coal. And then we can begin to bring online, hopefully, technologies and other possibilities for faster reductions and mitigation.
That was the US Special Presidential Envoy for Climate, John Kerry, speaking to Bloomberg's Francine Lacroix, spelling out the transition for the energy industry as he sees it. Coming up here on this programme, sterling struggles to shake off rising COVID cases in the UK. We get the details on the markets, though. Certainly sunny out there here in London. This is Bloomberg.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I really do believe that Bitcoin will be much more environmentally friendly, certainly than traditional gold mining or the traditional financial services sector. In many ways, it already is.
What about letting Twitter advertisers pay in crypto?
Any form of payment that they want to use, we should be able to take. So absolutely, but I'm more focused on like how do we create economic incentives in the network itself without having to rely on advertising.
Tesla's Elon Musk, Twitter's Jack Dorsey, and Cathie Wood of ARK Invest speaking there at the B-Word Crypto Conference. Now, we are 53 minutes into our European trading day, and Laura Cooper joins us from the Markets Live team, macro strategist on that team, of course. Laura, good to speak to you. So we've got earnings season in full swing, and that did seem to offer some comfort yesterday, pushed the S&P up again. We've got 2 days of back-to-back gains, strong gains coming through in the US, as if Monday was a distant memory.
Well, that doesn't okay. Happy to provide it on the stocks.
We seem to be having a problem with Laura's line. Laura Cooper, I'm not sure if you can hear me from our Markets Live team, but we are not able to hear you so well. So perhaps she'll be able to find a different part of her place of work to come and talk to us, as the reception where she is doesn't seem to be all that great. Let us have a look at what's moving on these markets then. This is the picture across European equity markets for you right now. Stocks Europe 600 up by 0.6%. So we are seeing that in some cases the earnings story is continuing to push us higher. The Xetra DAX up by 0.8%. The FTSE 100 fairly flat. It's interesting to think how this inflation theme though plays out, because just like the ABB boss told us earlier on, you know, all costs are going up was his view. But it doesn't seem as though the market has held that against ABB today. Perhaps it's about pricing power. Other businesses that say they're confronted by higher costs, maybe less able to pass them on to consumers, and as a result are being a little more punished. Let's have a think about some of those individual stocks that are in focus today. A little bit earlier, we checked out the sector picture for you, and consumer goods companies like Unilever were very much under pressure. And as a result, well, this is partly driven by the Unilever share price. So we've got Unilever moving this morning on the back of the update that we got through from them on their business. Let me just pull up what we had on Unilever this morning and where the share price is right now. It's down by 4.5%. There we go. Unilever down by 4.5%. This on the back of what they had to say about margins. So the sales growth at Unilever wasn't too bad, but it was the margin story that disappointed. The cost story has echoes of the financial crisis, echoes of 2008 for Unilever, so that is something the markets are mindful of. NatWest also under pressure, down by 1.5%. The government coming forward and selling a stake there. Another throwback to the GFC, to the financial crisis. It was back at the height of that GFC that the government took a more than 50% stake in what was RBS then, now NatWest. And so we see that stock down by 1.5%. ABB also in focus, up by 1.9% right now. This is the Swedish business, up by 1.9% on the back of, as I said, despite the fact that they mentioned higher costs, they're also looking to line up the IPO of one of their businesses, their EV charging business, clearly a hot area of business to be in right now. US futures, let's have a quick word on what's happening there, given that the European equity session is broadly really positive. The London market's sitting out that positivity. But we do see US futures picking up. E-minis up by 0.1%. Dow futures also higher. NASDAQ futures up by 0.3%. So I apologise that we were not able to bring you the thoughts of Laura Cooper and the Markets Live team. But there we go. Quick wrap of where we are on these markets as we bring the first hour of trading here this Thursday morning in Europe to a close. The European surveillance team will be here next. Surveillance early edition is up next. Skies are screamingly blue across London. Another hot day in store, it seems. This is Bloomberg.
happening in the business world right now is how to get workers back to work and what benefits to give your employees. Microsoft is asking employees to be back in the office 51% of the time, but you're flexible about the rest of the time. Is that a permanent policy? And for those companies that are saying you have to be back in the office 100% of the time, are they on the wrong side of history?
I think we at Microsoft, we want to be much more data-driven. I also think that in time, if a year from now, we will have more sense of what the real structural change and needs and the expectations of both our employees and our customers are. And we'll really think about long-term policies based on, quite frankly, having all of that data behind us, because otherwise I think we are trying to come up and being too overly dogmatic when I think we need to be more experimental in our approach to return to work, because I do fundamentally believe the world's changed.
I'm Alex Steele. It's a new race into space with billionaires, governments, companies, and investors all driving the industry.
Ignition, we have liftoff. Space is what allows you to see over the horizon.
We're going to see another incredible leap.
The opportunities here are massive.
Join me and Ed Ludlow for Space Race, a Bloomberg Television special report.
Friday on Bloomberg Television and Bloomberg Quick Take.
I really do believe that Bitcoin will be much more environmentally friendly, certainly than traditional gold mining.
We want to do a little bit more diligence. If so, then Tesla will resume Bitcoin, accepting Bitcoin.
I think something in the neighborhood of $15,000 is where we're going to end up.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition on this Thursday, the 22nd of July. I'm Francine Lacqua here in London, and here's what's coming up on today's program. The ECB holds the first policy meeting since overhauling its strategy. Investors watch for any tweaks to Lagarde's toolkit. Scott Minerd says U.S. stocks could plunge 15% in very rough autumn, while Unilever lowers its profit guidance amid what it calls the worst inflation since the 2008 financial crisis. And U.S. Special Envoy for Climate John Kerry says that now is a critical time for nations to agree joint action on climate change. We'll hear more from my interview. Now, back to our top story, and of course, it's the ECB's decision day. Today will mark the central bank's first policy announcement after raising its inflation target. Investors will want to know what this means for interest rates and bond purchases. Well, President Christine Lagarde has hyped the July meeting. Speaking to Bloomberg this month, she promised us interesting variations and changes.
It's going to be an important meeting because, number one, we're going to communicate differently. So what analysts, experts, journalists are going to see is a slightly different presentation of our monetary policy decision. And I very much hope that it will be clearer, simpler, crisper, to the point, and as little jargonic as possible. That's one. Two, there will be a forward guidance review, because we have to align with the strategy review that we just completed.
But the inflation conundrum is affecting both sides of the Atlantic. Now, speaking on CNN Town Hall, the president, Joe Biden, dismissed concerns that the U.S. would experience persistent inflation as the economy emerges from the pandemic.
The vast majority of the experts, including Wall Street, are suggesting that it's highly unlikely that it's going to be long-term inflation that's going to get out of hand. There will be near-term inflation because everything is now trying to be picked back up.
Well, we're joined by Monica Defend, Global Head of Research at Amundi. Monica, great to have you on the program, as always. Of course, I have a million questions on the ECB and actually what we could hear from them. But the bigger question is what you do with inflation at the moment. So you have companies saying, I need to raise prices. I've never seen inflation so high. And I guess you need to, either trust the central banks that it's temporary or something that will be more sticky.
Thank you and good morning. Inflation, we think that we have a traditional way to look at inflation that is not taking into account all the micro changes that are taking place. And I'm not only referring to the bottlenecks, but for example, thanks to the millennials cohort, which is just such a big number of people that is turning into the time to form a family or to buy a house. This will be inflationary per se. So there are some structural changes that are taking place and that are very difficult to plug into the traditional forecast. Having said that, 2021, we think we are living an inflation regime shift, which means inflation, we are going to end the year above 4%, and then it will abate to lower level, but remaining below, above the levels that we have seen pre-crisis. 2023 will really be the year where we will understand more where inflation is going to go.
So, Monica, do you believe that the cyclical reflation trade is actually over?
No, it is not. It is not over yet. But it is important to focus, on inflation, but growth is what we need. So the earnings season is what we are looking at with a lot of attention.
So where do you see the most value? Is there a rotation from one asset class to the other?
Well, we think that Europe is well positioned in relative terms, in particular, just because we believe the U.S. economy has already peaked, while the European area is entering the culm of its growth. Hopefully, the Delta variant will be a tail risk event to manage, but we think that recession fears are really overdone at this moment. So European equities and value are still the name of the game, but temper the risk allocation of the portfolio, positioning into relative terms trades.
Monica, what exactly are you expecting from the ECB today? So we had an interview with the president at the G20 in Venice, and she actually said this is a pretty exciting meeting because it's the first one since the change of the strategic review, which I guess traders had miscounted.
Yes, the wording will be really, really important. We expect a more dovish statement. We got a string of mixed data, the Delta variant around. So from the economic perspective, we really need to understand how the ECB is looking at that. We don't think that the key decisions in terms of the mix between PPP and APP, so the emergency measures and the asset purchases program, will be announced today. It will come later in autumn, just because I think the ECB will need some time in order to understand how the pandemic is going to evolve. So more dovish statement, some more notation around the strategy review, but key policy decision will be postponed to autumn.
Monica, what do you see as the ECB's biggest job right now? I mean, it's pretty difficult to communicate to the markets that you're going to be accommodative. I always have struggled to say that word. Whilst at the same time, you're seeing a pickup in inflation, which is quite robust.
Yeah, I think that really the central banks, not only the ECB, but also the Federal Reserve, are not happy about the current dynamic of the interest rates. I think they will continue when it goes to the ECB to maintain this dovish and accommodative stance. Inflation in the euro area is not the same as in the US. So to this extent, maybe the work out of the ECB might be a little bit easier.
Monica, thanks so much. Monica Defender from Amundi stays with us, and we'll talk a lot more about where she sees the most value. Coming up, Joe Biden urges Americans to get vaccinated as the Delta variant spreads amongst pockets of the population. Up next, we discuss where best to stash cash in the event of a full-blown virus resurgence. And then a little bit later, John Kerry also says it's time for nations to pull together and agree concrete action on climate change in time for this year's COP26. We'll hear from our interview shortly. This is Bloomberg.
I've always sort of pictured what it was going to be like. I mean, you know, like the ride up there, the ride back. And I never realized that the whole experience was going to be so vivid.
But beyond sort of the satisfaction of your own goals being achieved, what does today symbolize for the company and also for all those children that were present earlier?
Well, look, for the children, we've just got to get building as many spaceships as we can, as fast as we can, so that one day those kids will have the chance to have the similar experience to what I had. And that we will do. We also launched this giant global raffle today, so that, you know, 2 kids for, you know, just $10 for a pair of tickets. If they could win the raffle, they can go up. But that money will hopefully enable many people to be able to go up who could never have dreamt of going to space.
Up to Maine and had a lobster, and it's not as romantic as Lisa going to Greece.
Tom Keene says what?
You mentioned Maine and the lobsters up in Maine. Well, they can't compare to what you can see in Greece. Even better, I can't pronounce it. Astacoma carinata.
I nailed it.
It's not thera, whatever. Astacoma.
You're nailing it.
Carinata.
You're nailing it.
We're figuring out the hard stuff for you on Bloomberg Surveillance. Mornings on Bloomberg Television and Radio.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, U.S. President Joe Biden has urged more Americans to get vaccinated as the pandemic is only raging amongst those who haven't taken shots. And a rise of the Delta variant in America could also make things even worse. It now accounts for more than 80% of cases in the U.S. Well, here in the U.K., new cases of the virus are approaching 50,000 a day. So what could a resurgence of the virus actually mean for investments? Monica Defend from Amundi is still with us. So Monica, how difficult, first of all, is it to model if we go back into lockdown, depending on the number of cases? You know, because we have, in some respect, of course, broken that link between COVID infections and deaths or hospitalizations. But from a market point of view, how do you look at it?
Yeah, this is exactly the point. I think that recession fears at this stage are overdone for the reasons that you were mentioning, and because over time, governments have been learning how to manage and how to deal with the pandemic, so that even in case of lockdowns, these are not that detrimental to economic activity. And this is eventually a good news. The bad news is that this Delta variant seems to say that vaccines are not an end game, which per se is not positive. But we are not changing our central scenario. So no recession ahead, and we will continue to grow.
Monica, where do you see actually the most value in stocks? Is it, I don't know whether you do it regionally, so whether it's emerging markets, you know, compared to the US or even Europe, or whether you go for industries, so cyclicals or defensives?
We are neutral exposed in terms of equity exposure, but we are playing it in the relative space. On emerging market, we are a bit more worried with respect to some weeks ago, and the reason is the Delta variant. So we were supposing that the vaccination campaign would have taken steam in September, and this has been would have been quite favorable for the emerging market. We fear at this stage that with the Delta variant in the DM, this might spill over into a further delay into the vaccination in the emerging markets. So while we were thinking that September might have been a good month to re-enter the market, we might postpone it later in the year. We are looking at Europe and in particular at value. So it's a mix of regional and silent sector exposure at this stage, just because valuations are so stretched. But technicals remain favorable when I look at risk sentiment, for example. So you really need to construct your portfolio, picking the right sector and the right tilt, which for us is value and still some of the reopening sectors exposed to the pandemic.
Monica, yesterday we also spoke to the Guggenheim Chief Investment Officer, Scott Meinert, and he says that U.S. stocks could be in for a battering in the next few months. Here he is.
September and October are likely to be very rough this year. Maybe, a pullback of 15% or slightly more. But once the Dodgers are at the opening game in the World Series, I think you'll be able to buy it.
Monica, are you expecting some kind of correction in the autumn?
We think it won't be a straight line from now into the end of the year, but really earnings are the name of the game. This is what we want to see on the market, as long as we have earnings delivered by companies that, by the way, are saying that they have a higher pricing power over time. This might even overcome some sluggishness in the economic growth or higher inflation. So as long as EPS remains there, this is a good backup for the equity markets. But it won't be a straight line.
Thank you, Monica. Monica Defender, Global Head of Research at Amundi, joining us this morning. Now, coming up, Olympic burden. Tokyo faces further setbacks to tomorrow's opening ceremony. We'll discuss the long-term costs of hosting the Games. This is Bloomberg.
think that everybody understands.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lines in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the Tokyo Olympics is facing the latest in a series of unprecedented challenges as the director of the opening ceremony is fired a day before it takes place. The Games, mostly without spectators and against the wishes of much of the Japanese public, has faced intense scrutiny on whether the government is putting income above public health. The economic legacy of the Olympics can actually last far beyond just the initial 2 weeks of sports. Now, since 2005, Greece's Oaka Stadium, OAKA Stadium, has cost the state 200 million euros, but the site aims to reopen in 2023 with Greece investing 54 million euros into its redevelopment. Now, financed by Greece's European Recovery and Resilience Fund, the project will create 1,400 new jobs. Well, we're joined now by the Greek Prime Minister's Chief Economic Advisor. He is Alex Patelis. Mr. Patelis, thank you so much for joining us on Bloomberg this morning. First of all, give us a sense of how much you're expecting to get from this project. So it's creating jobs, but how difficult was it to try and find a regeneration plan?
Good morning, Francine. Good morning to everybody, and thank you so much for the invite as always. So this is one of the 102 investments that have been included in Greece 2.0, the label you see above me. It's our Recovery and Resilience Plan. This particular project is to regenerate the Olympic Stadium that was used for the 2004 Olympics, and to convert it really the whole area from a complex to more of a park. And so you're going to have cycling lanes and a new hotel, regeneration, a bigger park. The buildings will be renovated, renewed, energy efficiency, and we're aiming for a tripling of the visitors there. And this is all part of a bigger package of targeting the metropolitan Athens area. And what we have in the north is the Tetoi Royal residence being renovated. In the south, the Athens Riviera, the Hellenikon project. We have in the west, the Botanikos project, and in the center, moving ministries out of the center, protecting Acropolis against climate change, just a lot of stuff. Actually, last week we launched our first 12 projects from Greece 2.0. It's 1.4 billion. They're primarily digital projects, a lot of stuff to do with digitizing land registries, also developing an open data government platform.
So, Alex, if we could drill down into some of the specifics, I mean, you mentioned a couple of the projects that were actually included in this plan. What are you most excited about? What is the one that you think could it also attract a lot of foreign direct investment?
Absolutely. You know, it's like your child, which one's your favorite child? I'm afraid they all are. But I think what's important is that this is a program that covers so many different things. I'll give you another example. One of the reforms was voted through Parliament, labor market reform that's done, and we now have education reform coming through with appraisal for teachers, with giving more autonomy to secondary schools and introducing classes such as volunteering, sex education, environmentalism. And we have a lot of stuff going on. Actually, just after the holidays, the summer holidays, there's going to be a new bill coming to Parliament that will convert our supplementary pension system from a pay-as-you-go defined benefit system towards a fully funded defined contribution system. And that's going to mean that a lot of the domestic savings will be channeled through financial markets into the economy and create investment, growth, jobs. So there's a lot of different
what
stuff.
Is the role? Yeah, and what is the role of the banks actually in this resilience and recovery plan? And do you feel like they're well capitalized to support some of these projects and finance the economy?
Absolutely. The banks have gone through a long process of reducing their NPEs. They're going to have single-digit NPEs by the end of 22. So now they've moved on to a growth phase. And 13 billion of the loans that Greece will be getting through Greece 2.0, half of that will go to fund loans to the private sector through the commercial banks. And these are going to be targeted towards green projects, digital, export-oriented projects, research and innovation, and mergers and acquisitions. So targeted project through the banking system without, of course, the intervention of the government.
What is your biggest challenge right now, Alex? I mean, things, seem to be going okay. I know you've also been able to attract a lot of tourism. Are you confident that actually there's not going to be a resurgence of the virus in a way that you'll have to go into lockdown or actually, either put tourists into hotels or turn people away?
We had a target originally of 21 season being double of 2020 and half of 2019. And actually, I looked at the data prepping for this interview today, and where we are today, over the past week, for example, we are over 130% above the 2020 season, and we are just 42% below the 2019. And actually, more interesting than that is the trajectory. You still have this upward trajectory in the charts of international arrivals. So I don't know what's going to happen in the future, but the Delta variant does not seem to be reducing people's appetite to travel and to have a holiday. And I think there's a good explanation for that, Francine. I think we've all had a difficult winter with lockdowns and what have you. Many of us are vaccinated. We want our lives back, and we want a Greek summer. And as we were joking during the break, I believe a lot of anchors of Bloomberg are in Greece right now. So
I mean, I have to say, Alex, you did a fantastic job, actually, I think, in advertising, especially for, for U.S. viewers, that they can come to Greece. But what happens in the winter? Is there, there could be other variants. Greece is very reliant, of course, on tourism. Is there a plan B?
Actually, I'll object to one of your statements. Actually, in the first quarter GDP, what we found was that Greece is not that reliant on tourism, or is not as reliant on tourism as people might believe. First quarter GDP was just 2.7 percentage points below the pre-pandemic Q4 19 GDP level. And that's basically because we had very strong manufacturing, strong goods exports, construction investment, and that's in a quarter with lockdowns and with basically no overseas arrivals. Now, having said that, we are optimistic. Vaccinations are proceeding, and we are coming towards the end of this pandemic, and a combination of vaccinations and herd immunity, and infections will lead to herd immunity.
Alex Patelis, thank you so much. I have to look at my numbers again. I thought that a couple of years ago, 10% of Greeks were actually working in the tourism industry. Alex Patelis, I need to do more of my homework. Chief Economic Advisor there of the Greek Prime Minister, joining us this morning. Coming up, guidance on stimulus. The ECB holds its first policy meeting since overhauling its strategy. We'll be live in Frankfurt to discuss that next. This is Bloomberg.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
The ECB holds the first policy meeting since overhauling its strategy. Investors watch for any tweaks to Lagarde's toolkit. Scott Minard says U.S. stocks could plunge 15% in very rough autumn, while Unilever lowers its profit guidance amid what it calls the worst inflation since the 2008 financial crisis. And U.S. Special Envoy for Climate John Kerry says that now is a critical time for nations to agree joint action on climate change. We'll hear more from my interview. Well, good morning, everyone. I'm Francine Lacqua here in London, and welcome to Bloomberg Surveillance Early Edition on this Thursday, the 22nd of July. Now, let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The European Union says it will not agree to a renegotiation of the Brexit deal governing Northern Ireland, putting the two sides on a fresh collision course. That is after the UK called on the bloc to rip up and rewrite the protocol which governs the region. The UK says it is causing significant disruption to trade between Northern Ireland and the rest of Britain. China's flood-stricken Hunan province is bracing for more heavy rain just a day after a deluge sparked the evacuation of 165,000 people and left at least 25 dead. Videos circulating on social media showed subway passengers standing in chest-high water and cars being swept away as floodwater poured through the streets. 8 months of rain is said to have fallen in just 24 hours. Chile is to start offering COVID vaccinations to children under the age of 12 as of September. That's as the nation presses ahead with one of the world's fastest inoculation campaigns.
We expect to start vaccinating that population probably around August or September. Now we're vaccinating teenagers, 14 years old teenagers and up.
Now, India's actual COVID-19 death toll could be as much as 5 million, which would make it the country with the highest death toll in the world. Figures from research models and local authority data range from 3 to 10 times the official count, adding to evidence of massive underreporting. Skepticism has grown over the 420,000 total deaths claimed by the government. Now, the boss of Swiss engineering giant ABB says more or less of all of its input costs have gone up. That's as the company reported operating EBITDA for the second quarter that did beat estimates. The company revised full-year revenue growth higher to just below 10%.
More or less all costs have gone up, and yes, we're transferring some of that to our customer, but also trying to become more efficient in our operations, and that have helped us to actually drive the margins to this record level that we had this quarter.
Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, European Central Bank officials will outline later today how their new inflation goal affects their intention for future monetary policy. It marks the start of a potentially heated two-day meeting later, with the ECB President Christine Lagarde promising interesting variations and changes. Of course, we're at the end of the two-day meeting, and we have the decision today. So let's go straight to Manus Krajny in Frankfurt for the very latest, and he's also joined by a guest. Manus, is it sunny? It's always sunny where you are.
Francine, it is a glorious day here in the car park at the ECB. I get the glamorous, you get Venice, I get a car park outside the ECB. But the conversation will continue from Venice, where you caught up with Christine Lagarde, redefining forward guidance. The gentleman who will pass the words and make up his mind, it is the chief economist of Commerzbank. It is Mr. Jörg Kramer. Let's start the conversation. Christine Lagarde has promised an interesting day. How do you think the ECB will redefine, if that's the right word, forward guidance?
Yeah, you're right. They have to redefine it simply because they decided on a new 2% symmetric inflation target, and this needs to be incorporated into the forward guidance. One element of the new forward guidance could be that they say they allow for a temporary overshooting of the inflation target of 2%. If they are very dovish, they could say that they even allow second round effects, and second round effects means that wage growth picks up in response of the recent increase in HICP inflation. But I think this is not my main scenario.
You don't think Jens Weidmann is going to let them get that dovish, do you?
No, exactly, because Jens Weidmann, the Bundesbank president, he does not want to go for such a far-reaching change in the forward guidance. Therefore, a reference to overshooting, I think this is okay, but the second round effects, I think, unlikely.
Okay, so the phraseology will be about the overshoot. Now, I was looking at some of the estimates. Core inflation by this institution is estimated at 1.4% by 2023. Is that a problem for the doves?
Well, personally for me, it's not a problem, but you're right, for the doves in the ECB Council, the 1.4% had been a problem even before last month they decided on a new definition of price stability. For them, they would like 2%. And 1.4% in 2023 is far away and a problem for them.
Okay, but then the corollary to that, 1.4% by 2023, is you need more QE, not stepping back from QE, which takes us to the pandemic, the emergency bond buying program. What kind of flexibility do you think they might hint at today for PEPP?
Yeah, as far as the PEP bond buying program is concerned, they are unlikely to make a formal decision today. They will wait for September when they have their new forecast for inflation. However, today they may give a hint. For example, they may task ECB specialized working groups to find out how to transform the PEP bond buying program into a new format.
But this is where Lagarde hinted with Francine about morphing the emergency pandemic buying program into the normal program. First of all, do you think they'll use all of the 1.85 by March of next year? And is it a transfer? Will they just transfer what's left over, or how do you see it? How do you see it morphing?
The first thing is that I, for many months, have anyway forecasted that the ECB would raise the total volume of the PEP by 250 billion euros. And secondly, I think it's quite likely that they will continue to buy beyond March next year, because the ECB, they learned to love the PEP bond buying program with its flexibility.
Well, there is nothing so permanent. I think we have a full screen. There is nothing so permanent as a temporary government program. I must give that to Alberto Gallo in terms of reference that bonds are at 0.4%. Why are bonds at 0.4%?
Well, I would say primarily because of the increase in risk aversion. People are, they say what the fourth round of Corona may mean for the economy. Equity markets were weaker, etc., etc.
Can we go lower on yields briefly?
A bit, perhaps, yeah. But normally we are on a 6 months basis or so, somewhat higher, because I think Corona will be over in 6 months' time.
Jörg, I hope so, and we can return to travelling as normal. Francine from a very glamorous car park outside the ECB. There you go, chief economist at Commerzbank. Flexibility, additional PEPP, eventually by the end of the year, and COVID, God willing, will be done in the next 6 months. Francine.
Yeah, inshallah. I'm looking forward, of course, to that press conference. Madness, it looks glamorous. I don't know where the car park is, but frankly, Madame Lagarde even makes, the car park at the ECB look glamorous. Our Madness Cranny there in Frankfurt with Commerzbank's Jörg Kramer. Now, coming up shortly, time to step up. John Kerry calls on nations to do more to hit net zero. We'll bring you some of our conversation with the U.S. climate envoy ahead of the G20 climate summit in Naples. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, G20 ministers are in Naples today for a meeting on climate action. It comes amid increasing pressure to agree to meaningful action at the COP26 summit later this year. Now, ahead of this, I spoke to U.S. Special Presidential Envoy for Climate, John Kerry, and asked him what he would count as success in Glasgow.
The measurement of success at COP is going to be very clear to everybody. No, there are not going to be any secrets there. Either the countries come together at COP26 and the developed world particularly, the 20 countries that are the major economies of the world, really need to step up and come up with reductions that can keep the minimal amount of damage possibilities in focus. And that's what the scientists have told us we must do. This is not something any one country is dreaming up. The best scientists in the world under the UN International Panel on Climate Change have said, you guys have about 12 years to make the critical decisions that will avoid the worst consequences of the climate crisis. That was 3 years ago. So now we're at 9 years, and this is a very critical moment for the COP to take place, because we can come together to help less developed, fragile, vulnerable countries with adaptation and resilience, and we can do what we developed world need to do to reduce the damage being done by our practices of the way we produce energy.
But how likely is it that we keep that 1.5 degrees within reach?
Well, look, the Paris Agreement said well below 2 degrees. That's what everybody signed on to. What is well below? It's certainly not 1.9 or 1.8. It's somewhere close to the 1.5 degrees. And so I think it's very important to do it, because every decimal point of rise in temperature, it is remarkably compounded in the damage that it does. We're at 1.2 degrees today, and you see what's happening. Imagine what happens when you're at 3 degrees or so, which is the track that we are currently on. So it's imperative that countries respond.
Sir, can you talk to me a little bit about the timeline? So of the G20, first of all, reaching net zero, but also phasing out carbon and ending the subsidies, for example, for fossil fuel.
Well, we should be phasing out the subsidies as soon as we can. There's no excuse today for subsidizing the problem. I mean, that just doesn't make sense. I said yesterday that, paraphrasing Einstein, insanity is doing something that kills you when you already know it will kill you. We just need to be smarter than that. So I believe that in the COP we have a choice, which is to commit to enough reduction in 2020 to 2030 that we do what the modeling shows us is necessary to prevent a catastrophic rise in temperature. And we've already seen what's happening at 1.2 degrees. So the road ahead is pretty clear to all of us. We also need to stop funding new coal-fired power plants, because at least move to gas, which is 50% less polluting than coal. And then we can begin to bring online, hopefully, technologies and other possibilities for faster reductions and mitigation.
Well, that was part of our conversation with U.S. Special Presidential Envoy for Climate, John Kerry, as G20 ministers start their meeting today in Naples, Italy. Let's now get some perspective on the key issues going into the meeting with our Bloomberg Green reporter, Akshat Rati. Akshat, great to have you on the program. So how much do the recent extreme weather events, from flooding to fires, actually play into this policy debate?
We know we've seen extreme weather events increase in frequency and intensity over the past decade or so. What Secretary Kerry did not mention is some amount of heat is actually baked into the system. Even if we stop emitting today, the planet will keep warming for some time to come, which means we're going to see more extreme weather events, sadly, in the coming years. Who will get hit and how is unpredictable, but there is not going to be a let out for politicians because the pressure will continue to build up if they don't do enough.
I think our reporters over there in Italy actually got a draft of the communique, and it seems that their climate goal ambitions could be much stronger than they are. So in this Bloomberg scoop, it basically shows that they could end the week without an ambitious deal on climate change. Like, why is it still so slow? I'm hearing everyone talk that it's important, but in terms of actual allegiance and actual cuts, it seems to be more difficult than we thought.
Yes, it's a sign that progress is on these issues very slow. Now, the low-hanging fruit that Secretary Kerry mentioned, which is cutting fossil fuel subsidies and phasing out coal-fired power plants, are things that really G7 and G20 countries need to commit to, but they haven't. The G7 said we agreed to phasing out without giving a date, and we wait to see whether the G20 countries, which are countries that do have a lot of coal in their mix, actually say something. Now, it's crucial that what happens at the G7 and G20 gives a positive sign, because the meeting that's coming forward in Glasgow in November, COP26, that's going to involve a lot more countries, and the negotiations will become a lot more complicated. One of the things is that developing countries require this green climate fund, about $100 billion to finance the energy transition, and that hasn't come through too. So if we see movement on these things, that would hold a positive sign. If we don't, that would not be a good sign for COP26.
John Kerry also talked about climate tariffs. So what are the issues there, Akshat?
So climate tariffs, which are carbon border tariffs, they're called carbon border taxes, are essentially taxes added onto imports from carbon-intensive countries. It's one weapon that we've not seen wielded till now, but if the EU and, say, the US put on these carbon border tariffs, you could see China really step it up, because a lot of the imports that these two regions have come from China, and China is a carbon-intensive region, which means any imports coming from China will become more expensive, and that's not something China can afford. So if we don't see action on cutting emissions, it's clear that policymakers want to go further to make those happen.
Akshat, thank you so much. Our Bloomberg Green reporter there, Akshat Rati. Now, coming up, bulls versus bears. Scott Maynard thinks we could see Bitcoin at $15,000. We'll bring you some of our interview with the Guggenheim Global Chief Investment Officer next. This is Bloomberg. What does it change for your July 22nd meeting?
Well, we have a framework. We have a new framework that is unanimously approved by the Governing Council, and we're going to look at, as we always do every 6 weeks, we're going to look at the circumstances, we're going to look at what forward guidance we need to revisit. We're going to look at the calibration of all the tools we are using to make sure that it is aligned with our new strategy. And I think that, you know, given the persistence that we need to demonstrate to deliver on our commitment, forward guidance will certainly be revisited.
Does it give you extra tools? So on July 22nd, it's actually a bit, I mean, it was always a big meeting, but it's an even bigger meeting because it's not only something technically, right? It's not technical change.
You know, it's going to be an important meeting because, number one, we're going to communicate differently.
Billionaires in space?
What defines going to space?
There is a level where you
Is
get
the common line?
It's a common scientific theory, 53 miles, 62 miles.
I think that it's just being able to float around and then suddenly you feel like you can say you've been to space.
Zero gravity.
Zero gravity.
Surveillance correction right now. John and I went to Wikipedia. The Kármán line, John.
Yeah, the thing that I mentioned and you carried on talking and ignored me.
Stay grounded with Bloomberg Surveillance, weekdays on Bloomberg Television and Radio.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
I really do believe that Bitcoin will be much more environmentally friendly, certainly than traditional gold mining or the traditional financial services sector. In many ways, it already is.
What about letting Twitter advertisers pay in crypto?
Any form of payment that they want to use, we should be able to take. So absolutely, but I'm more focused on like how do we create economic incentives in the network itself without having to rely on advertising.
Tesla's Elon Musk, Twitter's Jack Dorsey, and Cathie Wood of ARK Investment speaking there at the B-Word Crypto Conference. Now, we'll talk a little bit later, or let's talk about cryptocurrencies right now, actually. We'll also talk about it a little bit later, but joining us now to talk crypto is Bloomberg's MLive editor, Eddie van der Walt. Eddie, as always, thank you for making us smarter on crypto. Now, Bitcoin recovered from below 30,000. I think it's currently at $32,000, level widely touted by technical analysts as a potential tipping point. So does that mean that technicals are losing their edge in Bitcoin?
You know, it's really interesting because you're right. Everybody was flagging 30,000 as that level that crypto has been testing and testing. And really, you know, crypto at the moment is so hard to fundamentally analyze that a lot of people are still looking towards, towards technicals. And I think that is going to be the primary method for pricing crypto in the sort of medium term. I think that potentially that base level is just sitting a little bit lower, perhaps somewhere around the 28,000 level at the moment. But there's still a lot of people who are very negative on crypto at these levels and saying that the drawdown could be bigger before the recovery kicks in.
So Elon Musk overnight said SpaceX owns Bitcoin. How important is celebrity endorsement for crypto, and is that a benefit or a risk for investors?
Yeah, we've seen this in general, right? We've seen this is the other side to the coin, is that, you know, crypto needs that air of publicity. It needs people talking about it to draw in new investors to make the price go up. So, you know, as long as people like Elon Musk or Cathie Wood talk about it, that brings the attention, the media attention, which then brings in the new punters. But that is a risk for crypto enthusiasts, as you rightly point out, because, you know, once there are more exciting things to talk about, once we start talking about the Olympics, we don't talk so much about Bitcoin anymore.
Eddie, what I can't understand, so I've always in my mind had, like, you know, there were the Bitcoin believers who would talk it up no matter what, and then the kind of the Bitcoin haters that would try and talk it down and say it's a rip-off and doesn't make sense. But what do you do with someone like Scott Minerd? I mean, he was a believer. I mean, it's not a believer, right? He actually made a call on where the price would go, but I think he said it would go much higher like 2 months ago.
It's really difficult. I think, you know, in financial markets at the moment, I think there's a little bit, it's fading a little bit now, but there was just a lot of what the crypto enthusiasts call FOMO, right? Fear of missing out. is a big thing, and for a lot of the mainstream investors and the people who service them. So companies that offer products for the mainstream investor. We're looking at crypto and saying, listen, how can we cash in? So that doesn't put them in the camp of full believers, but also there are some really interesting things happening in the DeFi space with Ethereum and smart contracts and so on, and that's where the real technological developments coming. So I think there's almost 3 or 4 different discussions going on. It's no longer just a Marmite love it or hate it discussion around Bitcoin.
Yeah. Indulge me, Eddie. I know you were also looking at Arabica coffee prices because they're the highest in 2014. Like, is this drought, or what does it mean for the price of the espresso in central London?
We can always talk about coffee, you and I know. Listen, and really, I'm much more geeky on the commodities than I am on Bitcoin. And yes, you're right. I mean, Arabica sitting at the highest in 6 years. We're seeing shrinking global supplies. And as you rightly point out, we've now got a drought. Also, we've had a drought. We've also seen frost in Brazil. And we've seen stockpiles at the lowest in 6 years. But overall, this just ties into that big inflationary debate that we've been having. Because part of this is also about moving goods and about, production of raw materials. And whether we're talking about, microchips or whether we're talking about the raw materials that go into our espressos, all of these things, we're seeing the prices tick higher. So the inflation debate, I think, is all part of it. It's kicking off.
Thank you so much. Our Eddie van der Walt there. We'll have plenty more, of course, on Bloomberg Surveillance Early Edition. This is Bloomberg.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Bloomberg Bloomberg surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Ferro, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I'm somewhat on the side of those who think that we may well have an incipient inflation problem.
It is obvious that we have a very, very important spike on inflation, particularly in the US, I would say, and the US economy has a very, very important influential role in the world.
I'm personally surprised, and I think our research team is surprised, about how complacent the market seems to be about the longer-term inflation.
This is Bloomberg Surveillance, early edition, with Francine Lacqua, Matt Miller, and Keely Lines.
It's 10 a.m. here in London, 11 a.m. in Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong. On this Thursday, July 22nd, our top stories today. Decision day for the ECB. The central bank reveals how its new goal on inflation will impact future monetary policy. UBS gets on board the Swiss bank, who joins Wall Street rivals in bumping up the pay of junior bankers. And infrastructure on hold. Senate Republicans block a debate over a spending bill that's still not finished, but some negotiators predict a vote will take place next week. Well, good morning, everyone. We have a pretty packed show as we wait for the ECB. We look at inflation, and there's also reports here and there, Kaylee and Matt, that actually someone like Unilever has now said they have to push up the price of ice cream and shampoo because of inflation. This is supply chain, so you kind of put the inflation debate back into the forefront in the markets.
Yes, inflation matters in this earnings season, Francine. Of course, it does seem to be earnings and maybe some dissipating fears on the Delta variant and its impact on growth that has aided risk sentiment in the past few days, and that was true in the Asian session. It was green really everywhere you look in Asia. If you type Matt Markets Go or WM Go for you, Matt Miller, on the Bloomberg terminal, you will see a lot of green. I would note Japan was closed today for a holiday, those Olympic opening ceremonies taking place tomorrow, but your big outperformance in Asia actually came from Hong Kong, the Hang Seng up about 1.8%. And one mover I would note in the Hong Kong session is China Evergrande. Of course, that indebted property developer that has been in crisis, but the share's up about 8% today. On the one hand, it settled a dispute with Guangfa Bank. On the other, it might be looking at listing its tourism business. In foreign exchange, the yuan slightly stronger against the dollar, despite the PBOC setting a weaker reference rate for a third day. And I wanted to point to the Thai baht as well. It was weaker by about 0.1% after the central bank said the current virus outbreak could wipe as much as 2 full percentage points off of GDP this year. As for the picture here in the U.S., it's been 2 days of gains led by the cyclicals. Those gains look to extend today. Futures up about 6 points or so on S&P E-minis at the moment. In the bond market, we're approaching 130 on the 10-year right now, 129.16. I wanted to point to copper as well because that gives you an idea of risk sentiment as well, and the fact that those growth concerns seem to be being put on the back burner for now because futures up 1% higher for a third day in a row. And finally, Bitcoin, Matt, up about 0.9%. Forget that Scott Minerd says 15,000. Elon Musk says SpaceX owns it. So that gives a little boost to the bulls.
Yeah, I think that was really interesting. But even more interesting today is the macro picture coming down into corporate stories. I'm really excited about Texas Instruments. I know you're going to talk about that a little bit later. And Unilever also is a great story. Take a look at my map here. European stocks are green for the most part. And you see some pretty decent gains here. The IBEX in Spain up more than 1%. We're looking at gains about 2% in Ireland right now. So for the most part, things are looking good. You can see that the euro is losing a little bit of ground ahead of the ECB meeting. We'll be paying very close attention to the euro as well as the 10-year yield on bonds right now, still about negative 40 basis points. But the Unilever story to me is amazing, not just because they make some of my favorite products. Hellmann's mayonnaise might be my favorite food in the world, but they also make Ben & Jerry's as well as popsicle brand popsicles. Did you know that they don't have popsicles in Europe?
What?
It's so weird and wrong, and it hurts me at my core, but I'm glad to be back here for a couple weeks where I can eat as many as I want. Down 4.5% because they cut their profitability targets, and that's where we see the macro coming into corporate. They're saying, look, inflation is real. It's the fastest that we've seen it in 10 years, and it's going to hurt our profitability this year, Fran.
Yeah, I mean, that was a pretty bold statement, Matt. I know we have popsicles because I eat them, but maybe they're called something else.
It's
Ice
a brand, popsicle brand popsicles.
Oh, I
it's
see.
a frozen
No, it's not the
treat,
brand.
and it's delicious.
Yeah. See, I didn't even know it was an actual brand. So there you go. That's the ignorance of Europeans when it comes to that. There is Angela Merkel also giving her summer press conference at the moment. This is usually, it has been a tradition. I know Matt Miller has been talking about it in the last couple of years. It's a rare opportunity for the press to ask the chancellor a lot of questions. She's now talking about, she started actually her statement talking about the catastrophic flooding in Germany that could also reshape sometimes, the election in September, saying that she's grieving over 170 deaths in the floods. Now, we'll have plenty more, of course, on this. You can also watch Angela Merkel on LiveGo or follow TLiveGo for news and analysis. Now, look at what else is ahead today. Of course, it's a big day for central banks. The ECB will publish its latest rate decision, 7:45 a.m. New York time. That will be followed by a press conference with the President, Christine Lagarde. Then the South African Reserve Bank will also post its rate decision. That's at 9 a.m. And then we'll get the U.S. existing home sales June report an hour later. They are expected to rise, breaking a string of 4 consecutive declines. Finally, Twitter and Intel among the companies reporting results after U.S. markets close. Now, let's get straight to Frankfurt. Investors keeping a close eye on that ECB monetary policy decision today will pave the way for some crucial debates, not only on PEP, but also on some of the tools out there. So let's get straight to our Manus Granny, who is outside the ECB. And Manus, I mean, this is suddenly a very interesting meeting. Usually there's a bit of a lull in July, but because of strategic review, it could actually change the toolkit that the ECB uses.
Absolutely. Make today count. Christine Lagarde really set that stage with you in Venice. This is a central bank at a very different moment to the descent of the Bank of England, the tapering of the Bank of Canada, or for the RBNZ. So the agenda is about the F's. Francine, Katie, and Matt. Flexibility of the pandemic buying program. How will that morph? Will they give us a hint of the capacity to love the flexibility of that? The forward guidance. How much tolerance is there for the overshoot? How explicit will the overshoot be? Or will it just be about the tonality of what it means to be above 2%? And freedom from that anachronistic language that some would say, which was a inflation target close to but below 2%. Madame Lagarde even said to you it was clunky. So it's forward guidance, flexibility and freedom. But as Jörg Kramer said to me from Commerzbank, the chief economist, he said, Manus, this is about monetary financing. Essentially, you have a central bank behind me, which is more or less bought the same amount of sovereign issuance that there was around Europe last year. So the bar is high to sort of double up the dovishness. And of course, in the last minutes, you had people talking about wanting to taper here at the ECB. So that seems to be far off her agenda. Let's see what the language is, guys, and whether they can double it up for the doves.
All right, Manus, thanks very much. Manus Craney there in front of the ECB for the all-important meeting today. Meanwhile, UBS is boosting pay for junior bankers in hopes of retaining younger employees. A ton of banks have been doing this over the past few weeks. Let's get the details with Danny Berger. Danny?
Yeah, Matt, look, obviously part of this is just about retaining talent. They're looking around at young bankers who are working harder than ever and motivation is really low. But to one degree, you look at these latecomers like UBS that are matching their rivals, and they just kind of have to do this in order to stay competitive. I mean, this is how wage inflation happens, isn't it? So they're boosting pay by $15,000 to $100,000. This is the package if you're a first-year analyst. Again, this is extremely similar to what we've seen at Citi Citi, Barclays, JP Morgan, Deutsche Bank, Nomura just announced a very similar thing as well last week. So across the board, similar moves, but I would point out a column from our Marcus Ashworth in a Bloomberg opinion column, what I really recommend to read, because he says, look, this is more than pay. Junior bankers want more than pay to keep them around. The pandemic has accelerated the need for a better lifestyle. And if they can get that plus better pay at a tech firm, a lot of these Wall Street banks are in a lot of trouble.
Yeah, maybe they're not wanting to work 72-hour weeks like Mary Erdos over at JP Morgan says is necessary. Thank you so much to Bloomberg's Danny Berger. And turning to Washington, Senate Republicans have blocked debate on the still unfinished infrastructure plan. Kathleen Hunter, Bloomberg DC morning editor, joining us now for the latest. So Kathleen, Chuck Schumer's vote yesterday failed. Now they say maybe Monday or Tuesday it will succeed. Are we actually going to get agreement by then?
Well, that's the big, million-dollar question in Washington right now. Obviously, it's been a long road already for this infrastructure package. Chuck Schumer really tried to light a fire under the negotiators' butts yesterday by holding this vote. That, was widely expected to fail. That's what happens. But, what we're seeing now is a real press to get this infrastructure deal together. And I think this is going to be a real test of Chuck Schumer's leadership. Is he able to get everybody he needs to get on board by Monday or Tuesday? I think that everyone's going to be watching that. It looks like it could happen, but, it's not absolutely sure that it's going to happen. And that's going to be really a test of Biden's agenda. It's going to be a test of Chuck Schumer's leadership. It's really going to be a test of what Democrats can do in Washington this time around.
Kathleen, we've also done some reporting on Jay Powell. His term ends in February. We understand that he has broad support within the administration, but actually the president hasn't made a final decision.
That's right. So, Jay Powell's obviously someone who had a very kind of tense relationship with Donald Trump. Donald Trump really took a lot of liberties beyond what presidents typically do in terms of the Fed's independence. I think that, the fact that he survived the Trump administration, the fact that Biden might make him even more likely to survive potentially the Biden administration. I think that it sounds like Powell is on track to be renominated for another term. But obviously, this is a huge issue for markets and also a huge issue for Washington. So everyone's going to be watching that very closely, but it sounds like there's broad support for him. So he's likely to, serve on at the Fed. That seems the most likely scenario.
All right, thank you so much to Bloomberg's Kathleen Hunter. And I want to get back to the markets now and take a look at some stocks moving in pre-market trading here in the U.S. And I have to begin with Texas Instruments. Reported after the bell last night, down 4.3% this morning, despite revenue growing 41% in the second quarter. The reason why is the company says its third quarter revenue may fall short of analyst estimates. It said it just can't predict whether or not chip demand is peaking right now. And that really raises a question for chip makers across the board because they are investing so much in bulking up their capacity. If that actually isn't met with increased demand, that could lead to an overshoot. Another stock moving to the downside is Las Vegas Sands, also reported missed estimates. Of course, it's facing issues with casinos still being, or travel really in Macau and Singapore still being a bit restricted because of the virus. And now it's Marina Bay Sands Casino in Singapore shut for 2 weeks because of a COVID cluster. That stock down about 3.1%. Netgear, though, plunging to the downside by 16%. Of course, a Wi-Fi equipment maker missed in the second quarter. Third quarter forecast came up short, Francine. It's getting punished in early hours because of it.
Wi-Fi equipment maker. I mean, I feel like it's the one thing, if they do it right, that everybody needs right now. Still, Kaylee, we'll look a lot more at some of these movers. Coming up, we'll also talk inflation, and we'll talk about the rotation with Andrea Iannelli. He's a Fidelity International Investment Director. And then a little bit later, Martin Luke, BlackRock Chief Investment Strategist for Germany. This is Bloomberg.
to the top about the mission as you see the evolution of fintech enabling what you call democratization. Do you think finance is becoming democratized, truly democratized at the moment? The fact that we're still having discussion about whether you can get in on IPOs, for example, are you feeling that the opportunities are there for anyone to be able to start to make their way within the financial world?
Look, there's always going to be progress to be made, but I think there are many brands now helping the unbanked and the underbanked, right? I think we've seen a lot of success in where digital disruption can really help with some of those groups. That's not really our target audience. We do want to offer great advice to everyone, but I think that there are a lot of other folks going after that marketplace. But there's always more progress. There's always more progress we can make. And sure, you're right. In places like private investing. And there are still sort of pockets of the market where you have to be in the know.
I'm Alex Steele. It's a new race into space with billionaires, governments, companies, and investors all driving the industry.
Ignition. We got liftoff.
Space is what allows you to see over the horizon.
We're going to see another incredible leap.
The opportunities here are massive.
Join me and Ed Ludlow for Space Race, a Bloomberg Television special report.
Friday on Bloomberg Television and Bloomberg Quick Take.
The vast majority of the experts, including Wall Street, are suggesting that it's highly unlikely that it's going to be long-term inflation that's going to get out of hand. There will be near-term inflation because everything is now trying to be picked back up.
That was U.S. President Joe Biden speaking on CNN's town hall yesterday. Joining us now is Andrea Iannelli, fixed income investment director at Fidelity International. And Andrea, we've heard so much more about inflation, not just from the president, but from companies coming out and saying we're raising prices to deal with higher input costs. It seems less and less transitory. What's your view?
Our view is that a big part of it is indeed transitory, or at least we won't see enough structurally higher inflation to warrant a substantial reduction in monetary stimulus. Clearly, we've had those supply chain disruptions that you just mentioned, but we do expect some of these to resolve themselves eventually. And I mean, if you look at the market reaction especially since the dot plot was updated in June, clearly the market does also think that a sudden or even a small reduction in monetary support may be a bad idea in the long term.
Andrea, what's happening actually in U.S. bond market right now?
So we've seen a pretty relentless rally and pretty swift rally in U.S. fixed income. Pretty much since the update in the dot plots hinted at potentially less stimulus by the Federal Reserve. And if you look back, probably the Fed statement and that dot plot came perhaps at not the best of times, because there were already indications of growth peaking. There's still concerns around the Delta variant and globally. And we're seeing more and more cash going into high quality fixed income, which has pushed yields lower. Now, from here onwards, we do think that the yields will remain well supported. We may see a little bit more volatility, but arguably, we're past peak inflation, peak growth for the time being.
Are savings in the U.S. really increasing? And Andrea, what does that mean for the yield curve?
Well, yes, savings have increased and been increasing for some time. If you look at cash balances sitting in a commercial banking system, they've really increased substantially in the last few years, and COVID has accelerated that. Now, that stock of saving is ultimately looking for income, is looking for a home, is looking for assets that generate an acceptable level of yield. And that means that as soon as yields rise, which they had done earlier in the year, that will be seen as an opportunity to invest further down the curve, leading to curve flattening like we have seen in the past few weeks. And if you think about the longer term implications of a higher saving rate and lower consumption rate, it also means that actually the recovery may not be, the long-term economic recovery may not be as substantial as many observers may have thought earlier.
Andrea, if the ECB is going to be more forceful and more persistent, how at odds does it put it with other developed market central banks?
Well, the ECB is an interesting one because until June, the ECB was seen as a central bank that was most likely to taper purchases and sort of reduce stimulus. Now the Fed has kind of taken that baton after the June dot plot. The ECB in particular now have recently updated their inflation framework, which kind of makes them net more dovish at the margin. And this is going to be the focus of today's meeting in particular, where they will likely update also the forward guidance. For us, the ECB is not in a position to remove stimulus. Inflation is likely to remain very low and certainly nowhere near close to the 2% target that they have in mind. And we expect purchases to be extended even after the PEPP kind of comes to an end with an enhanced APP purchase program in 2022.
Andrea, thank you so much. Andrea Iannelli there, Fixed Income Investment Director at Fidelity International. Coming up, we'll get more reaction from the ECB decision from the former ECB economist. He is chief economist. He's Peter Pretz. That's at 10 a.m. in New York, 3 p.m. in London, and this is Bloomberg.
Up to Maine and had a lobster. And it's not as romantic as Lisa going to Greece.
Tom Keene says what?
You mentioned Maine and the lobsters up in Maine. Well, they can't compare to what you can see in Greece. Even better, I can't pronounce it. Astacoma carinata.
I nailed it.
It's not thera, whatever. Astacoma.
You're nailing it.
Carinata.
You're nailing it.
We're figuring out the hard stuff for you on Bloomberg Surveillance. Mornings on Bloomberg Television and Radio. curtain will rise again.
Broadway's returning June.
Have you bought tickets?
It's busted out.
You've got more time here. Have you
Commodities are up.
Keep going.
To the moon.
Beautiful.
Bloomberg Surveillance, weekday mornings on Bloomberg Television and Radio.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lines with Matt Miller in New York, and Francine Lacqua is in London. Now let's get the first word news, and it's almost as if the pandemic and the long tariff war between the U.S. and China never happened. The two countries are shipping goods to each other at the fastest pace in years. China is buying more American farm goods, and U.S. imports are being described as through the roof. But the U.S. trade deficit has not shrunk, most tariffs are still in place, and there haven't been any negotiations over other economic issues. The U.S. and Germany have made it official. They're finishing a deal approving completion of the controversial Nord Stream 2 pipeline. That effectively ends a long-standing dispute over German gas purchases from Russia. The deal calls for Germany to take action if Russia tries to use energy as a weapon against Ukraine. The actual COVID death toll in India could be as high as a staggering 5 million. Even the most conservative estimate, 1.3 million, would be more than double that of the U.S., which has the highest recorded death toll from the outbreak. The numbers range from 3 to 10 times India's official count. They were derived from research models and local government data. And Unilever sees inflation being the toughest since the 2008 financial crisis. The company is warning that costs for raw materials used in shampoo, detergents, and ice cream are rising at the fastest pace in a decade. Unilever has been raising prices, but slowly, so it won't shock consumers. And Matt, I know for you and I, our ice cream demand is pretty much inelastic. You can charge me whatever you want for it. I'm still going to buy that, but it may not be true for all consumers.
Yeah, no, absolutely. And that would be the biggest tragedy, right? If people didn't have access to the ice cream that they need so badly. But Unilever makes a ton of other products, right? They make
that they need
Dove
so
soap.
badly.
They make laundry detergent, stuff you could do without. Ben & Jerry's Netflix and chill is necessary.
Yeah, there you go, Ben & Jerry's. I hope it's in the inflation basket, right? Because this is, maybe we're measuring inflation wrong, and it goes back to some of the choices that we make as consumers. It's a bit of a joke, but it's also one of the deep conversation. We're also having a conversation actually about how, going back to New York, Matt has a plethora of choices when he goes to a restaurant, which frankly for Europeans, it like blows your mind.
Yeah, that's why I like it here.
Coming up, we'll talk about inflation. We won't talk ice cream with Martin Luke, BlackRock Chief Investment Strategist for Germany. This is Bloomberg.
Blast off. China's first manned mission in 5 years is on its way. 2 veteran astronauts and 1 newbie are making their way to Tianyi Space Station, which means heavenly harmony. They're travelling in the Shenzhou 12 spaceship, launched by a Long Mark 2F Y12 rocket.
我们一定服从命令，听从指挥，沉着冷静，精心操作，圆满完成神舟12号载人飞行任务。
The crew members will be staying at the station for 3 months. They'll be carrying out experiments, testing equipment, maintenance and more.
2022年完成空间站的在轨建造，建成国家太空实验室。之后，空间站将进入到应用与发展阶段。
Once completed, the space station will allow for stays of up to 6 months, just like the International Space Station. China has big ambitions for its space program. Last month, it landed a probe on Mars that carried a rover, the Zhurong. It sent 11 astronauts into space and 2 years ago sent the first spacecraft to land on the far side of the moon.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix in London, Matt Miller and Katie Lyons in New York. And we're all excited about the ECB because it'll give us a bit more of a glimpse into inflation. We heard yesterday from the presidents of the U.S. I mean, he didn't use these exact words, but he meant to say that actually, in his view, inflation is transitory.
Yeah, absolutely. I think the ECB, though, and this is the key, is on a different track slightly than the Federal Reserve. Although we have seen bond rates go down while the U.S. Treasury rate bounces back up. So the interest rate situation is a little bit different, and the inflation situation is different. Certainly, they're in a different stage of the reopening.
Yeah, and Kaylee, how's it all playing out in the markets today?
Well, we have about 2 hours and 15 minutes or so to go, and right now it is a risk-on tone. The cyclicals really leading the charge once again, as they have been for the past couple of days. In Europe, that means the stock 600 is right around session highs right now, up about 0.75%. And here in the U.S., I have been astounded by the performance of the small caps. First, lagging the market dramatically, but over the last 2 days, up 5%. Those gains look set to continue today with futures up about 0.2%. Matt was talking about the differences in the bond market between Europe and the U.S. In the U.S., we're essentially unchanged on the 10-year yield, right around 1.28%. Yes, that's higher than we were earlier this week, but still about 50 basis points below the highs of the year. And finally, ahead of that ECB decision, the euro going essentially nowhere. We are just under 118. As for some stocks moving in pre-market trading, I just want to talk about the chip makers because Texas Instruments, of course, reported after the bell last night. Second quarter revenue up 41%. That's not the issue. The issue is the forecast. Maybe they're being a little bit conservative, or maybe they are indicating that chip demand may actually be peaking, and therefore all the capacity that chip makers are putting in may be overshooting it. So Texas Instrument is down about 4.3%, and you have some other chip makers under pressure in early hours as well as a result, Francine.
Now, the ECB announces its policy decision later today as the inflation debate rages on, and the president, Christine Lagarde, has hyped the July meeting by promising interesting variations and changes.
It's going to be an important meeting. We have a new framework that is unanimously approved by the Governing Council. We're going to communicate differently. It will be clearer, simpler, crisper, to the point, and as little jargonic as possible. There will be a forward guidance review because we have to align with the strategy review that we just completed. We want to continue to support this recovery that is underway. So yeah, there will be some interesting variations and changes. Now is not the right time to talk about exit strategy.
Well, joining us now from Frankfurt is Martin Luck. He's Chief Investment Strategist for Germany at BlackRock. Martin, thank you so much for joining us. I mean, we are expecting some kind of communication review, but also policy review because of the strategic review put in place by the ECB. If it doesn't come today, will the markets be disappointed?
Yeah, hi Francine, and thanks for having me. So I think the markets are looking for some change, some tweak to the language. So there would be some, let's say, astonishment, if not say disappointment, if it were not to come today. And there is certainly a reason why the ECB put forward the communication of its strategic review results, which many people expected to be published in Sintra. So I think there is the explicit wish on the part of the Governing Council to communicate some changes to the forward guidance today.
Okay, what does it mean for actually your investment strategy? I mean, we start to have earnings and chief executives now talking about inflation. What if central banks were wrong and this inflation stays?
So I think, first of all, there is a much lower probability of persistent inflation in Europe compared to the United States. Well, first of all, Europe went into this COVID situation with an inflation rate that was structurally roughly 1 percentage point lower than the US. Secondly, there is much more slack on the European labor market compared to the US. The unemployment rate was twice as high as in the United States at the start of the COVID crisis. And thirdly, fiscal stimulus is much more expansive in the United States compared to Europe. So there are at least 3 boxes you can tick for inflation to be persistently higher in the US once this inflation hump runs through the system, which is basically driven by base effect and the strong pent-up demand due to the restart of the economy. But then it remains to be seen. And I think that in the longer-term perspective, the inflation gap between the US and Europe is likely to be higher than the past.
I want to welcome our listeners on London DAB Digital Radio right now and talk a little bit about what's going on with the Bund rates. Kaylee and I were chatting about this earlier. Martin Look from BlackRock is with us. I've got a chart here that shows the Bund rate going back to 2015 when it was still positive. It turns negative in 2018 and eventually comes down, down, down. A little bit of a bounce back, and that's helped European bank stocks really improve and outperform in the first half, Martin. But the rate has come back down. We're at negative 40 basis points, and bank stocks, European bank stocks, hurt along with it. Now, I know that the ECB wants everything to be as accommodative as possible, but don't they also want the banking sector to be profitable? Isn't it a problem when bunds are this negative for such an important industry in Europe?
Well, first of all, you are right. This is not good news for the financial sector. And interestingly, the ECB has also stressed the stability and the robustness of the financial sector as a very important target in their strategic review. So I think this is a crucial issue. And also, as an economist, I must say it is not good if the interest rate per se loses its allocation function in an economy per se. But what we're seeing right now is obviously driven by positioning, driven by very much liquidity, and very many investors really waiting on the sidelines for more news to come, especially in the reporting season regarding the equity market and new positioning looking into the second half of this year. So I don't think that this will necessarily be a long-lasting story here. But you are right. This is definitely not good news for banks in the European region.
Will the ECB try and stay more dovish for longer than the Fed in order to move the currency around? Of course, they don't explicitly focus on exchange rates, they say all the time. But Villeroy has said recently that really it's a huge focus keeping the currency competitive.
Well, definitely. And really keeping the currency slightly weaker is definitely also a very important instrument, even if the ECB doesn't say that explicitly. We know that the major impact from really expansionary monetary policy has worked through the exchange rate ever since the ECB went into its non-standard measures. So this is definitely a focus, even if the ECB doesn't commit to it officially. I think the new results or the new inflation target, the symmetric inflation target, or as Christine Lagarde was even saying, referring to it as a new framework, this creates a lot more room for being more dovish than the ECB used to be before. So I think this is also one of the crucial points here in today's communication, that they want to prepare markets for a looser for longer framework. This is exactly why they made this communication of the strategic review results at such an early point.
Martin, monetary policy, of course, is one factor that equity markets have to consider, but there are a number of other risks out there as well. And we were speaking with Guggenheim's Scott Minerd on Bloomberg Television yesterday. He was warning of a pretty major pullback that could come. Just take a listen to what he said.
September and October are likely to be very rough this year. Maybe, a pullback of 15% or slightly more. But once the Dodgers are at the opening game in the World Series, I think you'll be able to buy it.
And Martin, one of the risk factors he was talking about in that conversation was the spike we are seeing in COVID-19 cases due to the Delta variant. With that ongoing, with that risk out there, where in the equity market do you want to hide?
The point here is that we have been going through a quiet period with regard to COVID news for roughly half a year now, and we had kind of gained the understanding that we were now knowing about the virus, but we don't know this particular part of the pandemic yet. So I think a rise in cases is actually what is happening, what will probably delay the economic restart in some regions, or at least dampen it to some extent. And that means that probably some of the run that we have seen in cyclicals and probably also value is maybe a bit dampened in the medium-term perspective. We think that there is still quite some interest in European value, but that the attractiveness of technology remains a structural issue. In terms of regions, for the time being, we remain slightly overweight Europe, and we remain neutral US, because we know that in this kind of market environment, investors tend to look a lot at valuations, and that's the crucial point here. But again, this is a technical assessment. This may change in the autumn.
I feel like we can't just leave Scott Minerd's Dodgers comment there without mentioning, and Francine, as you know, they're not even first in the NL West right now. So it's a pretty serious assumption that they're gonna make it to the World Series. I just wanted to point that out.
Yeah. It is. Look, you know what chat I have on U.S. sports is that I actually read, thanks to Tom Keene, that the Dodgers have acquired Bill McKinney there from the Mets. So that's as far as my conversation on U.S. sports goes. Back to the ECB, back to the markets with Martin Locke. Martin, save me. When you look at the question that Kaylee had, which is where do you hide? How do you actually view the breakdown? So do you go for sectors? If you can be specific onto what the right way to look at the markets right now, is it European equities that you like? Or is it small caps?
Well, it's probably both, and it's probably split by regions. So if you look at the US, for example, we would be more into mid and small caps, because those companies in the US are probably benefiting from the very substantial fiscal stimulus that the US government is putting into place. Whereas there are still some cyclicals in Europe which are going to benefit from the economic restart at some stage, maybe due to the Delta variant a little bit later than originally expected, but they will eventually benefit. And with the recovery of global trade, this is also a place to be. So I think it is a split. You probably want to be overweight a large cap European and maybe then small cap US.
Wonderful. Thank you so much, Martin Locke, there, Chief Investment Strategist for Germany at BlackRock. Now, speaking of Germany, the Chancellor Angela Merkel is also giving her annual summer press conference. We'll continue to monitor what she says. And I know, Matt Miller, you've been following this very closely, being based in Berlin. And I guess the focus now is on the floods, on the people that lost their lives, and that could change the dynamic into the general election in September. So we'll talk a lot more about that shortly. This is Bloomberg.
Das beste persönliche Verhältnis und warum? Nein, das werde ich jetzt nicht im Sinne von Noten geben, beantworten.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Francine Lacqua in London. Well, UBS joining the ranks, the latest bank to raise pay for junior bankers, offering $100,000 for first-year analysts, just like pretty much everybody else. Bloomberg opinion columnist Marcus Ashworth writes that the banks are going to have to up their game to attract and retain talent, and it's not all about money. Marcus Ashworth joining us now. So, Marcus, if I'm a junior banker and I'm being offered $100,000, that may be pretty attractive, but you're saying that just doesn't go far enough to actually meet the bank's aim here.
Well, it's not so much that. I mean, it's always all about the money in certain ways, but it's just that some of our more talented graduates coming through can see an awful lot more than $100,000, because with so much money being thrown at startups, venture capital, private equity, that's where the big bucks are going to be made, and obviously also in Silicon Valley, as we've known for many years. So it's what attracts the best and the brightest to Wall Street is not just an extra 10,000 here or there. It's how much will they be able to grow their career and in a way which is exciting, doing different things, and not being forced through 100-hour weeks to do stuff, CFAs and stuff, which may not be their ultimate goal in life. Why would it be?
But Marcus, are there really, these kind of, are there bidding wars for junior bankers actually? And is there a shortage of bankers? Is this why they get paid so much? Like, one of the things that we've been trying to figure out is, okay, you have an intake of 20 junior bankers. How much of them actually end up partners?
Well, this is the interesting thing. I've often been a part of a graduate training schemes looking at these things, is that often both sides play the game. I mean, I'm just speaking to a friend of mine who's had 7 female colleagues leave his firm the last few weeks, going to bulge bracket houses. So a lot of the smaller or middle tier banks and pay a lot of money to get these bright people, and then the best go off to the big banks. So there's always an aggressive turnaround and poaching of talent. We're seeing what's happening at Credit Suisse at the moment. Everyone's going off to try and make money elsewhere. So yes, there is a demand for people. It's just that this isn't getting anywhere for the people that Wall Street really wants, those rainmakers, the complete game changers who will come up with new and interesting, exciting things. And that, I think, is where if you have an ambition above and beyond, people will go elsewhere.
So, Marcus, all of these first-year bankers are now getting $100,000. Last week, the biggest law firms in the United States said they're going to start their first years at more than $200,000. And I was sitting at my Stammtisch the other night with a group of investment bankers and lawyers who unanimously agreed if they were kids today, they would be lawyers instead of investment bankers. Do you agree?
Not necessarily, but I mean, they both have very good career paths. I think you have to understand that the lawyers getting paid $200,000 have already done at least 2 years worth of training within their firms, and they've become associates. So they've gone through that 100-hour week grilling. I'm sure they'll continue to do sort of same sort of hours, but at least they are fully qualified and billable straight away. And that's the point. You can bill them and have a clear commercial worth. Going into banking, it's a different story. You have to learn and do Excel spreadsheets ad nauseum. It's not really adding any great value. It's a real pressure, and almost you've got to go through that ring of fire to do your dues so you can come out the other end. And I think that's what's putting off a lot of perhaps very able people.
Marcus, thanks so much. Marcus Ashworth, Bloomberg opinion. Too much regulation. Matt, I love the way you place that. It's kind of, the bankers versus the lawyers. I know that later in life, it's the lawyers that work for the bankers.
Yes,
so,
that's exactly.
They're not treated very well, even if they make maybe a bit more money.
And that's exactly the point that a lot of the old guys at my club made, which is that later, right, the good lawyers end up working for banks, and then they're really raking it in.
Yeah, but also maybe get really badly treated by the investment bankers. Never mind, we'll have to talk about this. We have to do a whole show, around this, because it's one of the, juiciest conversations right now on Wall Street. Now, the NatWest chairman, Howard Davies, also says COVID has permanently changed office life.
I do think that the days when 2,500 people walked in through our office door on Bishopsgate at 8:30 and walked out again at 6 o'clock, I think that's gone. We are looking at having a minimum expectation of a few days a month that people will definitely have to be in the office, and then it will vary by teams, but I suspect there won't be that many people who are doing 5 long days in the office, aside from some of the trading areas where, pretty much have to.
Matt, it's difficult to know what, the youth of today want. I was just happy to have a job when I was young.
Yeah, it's funny that you say youth of today, because back in New York, where that punk rock scene started with the band Youth of Today, I've been thinking about that a lot. In terms of Howard Davies, I'm not sure if he's very much in touch with the youth of today, but clearly what they want is something very different than the generations before them.
Yeah, absolutely. Now, we're also getting some breaking news. This is a pretty big piece of news. This is the Chinese regulators considering serious, perhaps unprecedented penalties for Didi Global. This is after its controversial initial public offering last month. Now, this is a Bloomberg scoop. Regulators see this, the Giants' decision to go public last month, despite the pushback from Chinese regulators, as a real challenge to Beijing authorities. So through our reporting, our team on the ground discovered that actually they could really crack down on Didi quite significantly. You can see pre-market Didi down 2.9%. We'll have plenty more on this story shortly. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Matt Miller and Katie Lyons in New York, but also in New York. Tom Keene, our co-anchor of Bloomberg Surveillance, who always makes me smarter on baseball. Tom, I know you're looking, of course, at the ECB, looking at Italy. So thank you so much for looking at Italy. I mean, the situation in Italy is really uncertain when it comes to GDP.
Spend a lot of time with John Farrow looking at GDP and looking at American GDP, the boom economy, Francine, that we've got over here. And I don't think there's enough talk about the lethargy in Europe. The chart is extraordinary. This happens to be one of the more difficult stories, the stagnation of Italy. And it's a downward slope from 2008. This is nominal GDP set in US dollars. And Francine, to me, the headline here is not what we're looking at. The headline is Finland isn't much better. Germany's a little better. I mean, there's a German distinction, but not all that much compared to other successful economies in the Pacific Rim. Lagarde has to worry about continued stagnation, even within relatively good news.
Yeah, I mean, I'm looking forward to the show, Tom, because I think you're hitting something that, the markets needs to look at a lot more. Tom Keene there, co-anchor of Bloomberg Surveillance, joining us. Now, look at what else we're watching, and I know, Matt, you're all over the Olympics.
Yeah, I can't wait, actually, to see the Olympics. I've been thinking about this in terms of COVID and should they or shouldn't they, and are there spectators that are coming? And I had forgotten the excitement of the Olympic Games, of the competition. These are kids that have been training their entire lives for the most part, and they've got one shot to show it on the world stage. So the opening ceremony starts tomorrow in Tokyo at 8 p.m. their time, so that's 7 a.m. here in New York, noon in London, and I think I'm probably going to shut myself in the whole weekend and just watch the Olympics.
Yeah, I love the Olympics, but also with it comes a lot of heartbreak for, the athletes that don't quite make it. I'm looking at the ECB decision. We hope we don't get any heartbreak there. Certainly investors want to be updated on the new strategy. They're looking forward to understanding what the forward guidance means, but there's still this debate on how to withdraw the emergency bond buying, and that's not expected until September, which leaves currency traders really not really expecting big fireworks today. We'll have plenty more on that throughout the day. This is Bloomberg.
happening in the business world right now is how to get workers back to work and what benefits to give your employees. Microsoft is asking employees to be back in the office 51% of the time, but you're flexible about the rest of the time. Is that a permanent policy? And for those companies that are saying you have to be back in the office 100% of the time, are they on the wrong side of history?
I think we at Microsoft, we want to be much more data-driven. I also think that in time, if a year from now, we will have more sense of what the real structural change and needs and the expectations of both our employees and our customers are. And we'll really think about long-term policies based on, quite frankly, having all of that data behind us, because otherwise I think we're trying to come up and being too overly dogmatic when I think we need to be more experimental in our approach to return to work, because I do fundamentally believe the world's changed.
Billionaires in space?
What defines going to space?
There is a level where you
It's
get...
the common line?
It's a common scientific theory, 53 miles, 62 miles.
I think that it's just being able to float around and then suddenly you feel like you can say you've been to space.
Zero gravity.
Zero gravity.
Surveillance correction right now. John and I went to Wikipedia. The Kármán line, John.
Yeah, the thing that I mentioned and you carried on talking and ignored me.
Stay grounded with Bloomberg Surveillance, weekdays on Bloomberg Television and Radio.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
Everything has told us here that we're in a regime shift. We're going to now see growth decelerate and inflation decelerate.
We think it is just a pause as opposed to a phased transition.
People get overwhelmed with information that they can't process, and so they just go, you know what? Risk off.
It's probably not the optimum time to be very overweight on risk.
We are going to see a deceleration in growth, that's for sure. But I think the U.S. consumer will stay quite resilient.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
It is ECB Day from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance live on TV and radio. Alongside Tom Keene, I'm Jonathan Ferro. Together this morning with Katie Lyons. Lisa will be back with us on Monday, we're told. Tom, equity futures up 8 points on the S&P, advancing 0.2%. 1 hour, and what are we? 1 hour and 45 minutes away from an ECB decision day. Tom Keene.
Yeah, big yield reversal as well. John, the equity, the carnage in equities here in this correction we've had. I just did a careful calculation and surveillance on Thursday on ECB Day. Well, you know, we go out to a certain number of digits. How about a negative 0.60235% market drawdown, John? It's a crisis in equities.
Okay, since we're being snarky, here's the line from Paul Donovan going into the ECB of UBS. You'll love this. Quote, the ECB has set itself a new inflation target to miss, and markets want to know how they intend to go about missing it. Close quote. Tom, that's the story for a lot of people in this market going into this news conference later this morning.
I just did a survey of nominal GDP for Francine Lacroix. Of course, Italy is, you know, Draghi's got his work cut out in Italy. And Finland, I was surprised, really not all that good. Germany, a little better as well. But the bottom line ECB story is they're managing a traditionally lethargic growth, trying to give it some form of oomph.
That's Europe. Let's talk the US. Did you watch the town hall with the president last night, Tom?
No, I missed that.
I missed that too.
Padres doubleheader.
I was sleeping. I think that's when Katie Lyons wakes up. Kaylee, the president making the point
save us, Kaylee,
that higher wages are a feature and not a bug of the policies of this administration.
He's just trying to make the case for his infrastructure spending, John. He keeps reiterating again and again that look at what economists and look at what Wall Street is telling you. They're saying it's transitory, therefore it must be. This idea that the pricing pressures occurring as the economy reopens are just going to pass us by. It's not going to stick around forever. And that makes it a lot easier to make the case to pump trillions of dollars more into this economy, or at least in theory, if Chuck Schumer can get his act together there in the Senate, John.
We'll catch up with our Washington correspondent, Anne-Marie Hordern, in about 15 minutes' time on this program. We'll head down to D.C. Looking forward to that. Let's get you up to speed on the price action going into that ECB decision and jobless claims a little bit later this morning. Equity futures up 8 points on the S&P, advancing 0.2% after the biggest two-day pop on the S&P 500 going back to the middle of May. Outside of that, what a range we've seen on a 10-year yield. Tuesday morning, Tom, at the lows on a 10-year, we were looking at 112.60. At the highs of yesterday, 130, and right now 128.83.
What was the why of the pop yesterday?
I think in the back half of the session, Tom, another light auction, soft auction. This was a 20-year issue. But outside of that, we've had a massive range with not much in between.
Yeah,
and I'm with you, Tom. No
Kaylee,
big data
tell me,
points.
you don't look at the auctions. I mean, we leave that to Abramowitz, right?
I don't know. I think we look at the auction since that 7-year a few months ago, Tom.
There you go. Some pushback, Tom, from Katie Lines. Have you noticed this? The guest hosts come in.
Yes, I've noticed
Katie
this.
Lines, Taylor Riggs, Romaine Bostick, just some Tom Keane pushback. Katie, good morning.
Yeah, we're just here to stoke the fire a little bit, John. Good morning to you. What a morning it will be. 7:45 a.m. Eastern time, as you say. Just under an hour and 45 minutes from now, we will get that ECB decision, followed by the press conference from Christine Lagarde. What exactly are we going to get in terms of forward guidance changes now that we do have that 2% symmetric inflation target? And what does it mean for ECB credibility? Can they really convince the market that they can reach that target? Of course, that press conference from Christine Lagarde starting at 8:30 a.m. Eastern time. Also at 8:30, we will be getting initial jobless claims data. 350,000 is the print we're looking for. Would be a fresh pandemic low. Of course, we know the Fed watching inflation, but also watching this labor market extremely closely. And what I'm going to be watching extremely closely after the bell earnings, we're going to get a slew of them. Intel, I think, could be interesting. And the reason why is we had Texas Instruments last night blowing it out of the water in the second quarter in terms of 41% revenue growth, but a little cautious on the forecast. Does that indicate that chip demand may be peaking? And what does that mean for some of these chip makers investing so much in bulking up their production capacity? We're also going to get Snapchat, Snap and Twitter earnings as well, looking for what engagement and, of course, advertising revenue is going to look like for those guys, John.
They're the stories for later. And Kaylee, thank you. Here's the story for right here, right now. DD in the pre-market is down another 3%. The ride-hailing giant over in China. More trouble, Tom. Some great reporting from our team here at Bloomberg. Let me run you through some of the highlights. Chinese regulators are considering serious, perhaps unprecedented penalties for this company after its controversial IPO last month. This, according to people familiar with the matter. Regulators, and I think this is the important point here, Tom, seeing the IPO last month despite pushback from the Cyberspace Administration in China as potentially a challenge to Beijing's authority. This story's not going anywhere anytime soon, Tom.
And it's not that it's a story, John. My headline here is it's many stories. It's not just Didi. It's this. And as we've heard from Ambassador Haas and others, this is a sum of beliefs of President Xi over what capitalism should look like under a President Xi.
I agree with you, Tom, and this is the Beijing side of it, but also the U.S. capital markets side of it as well. For this IPO specifically, what were they told before they came public? And what did they disclose and what did they hold back from potential investors? You will not hear the end of this, Tom, for a while.
It's like some people say it started with NBang, the people that bought the Waldorf Astoria. I don't know. What I know is it's a sum of parts where every day there's a drip.
Great reporting from the team here at Bloomberg just to push forward that story. That stock is down by a little more than 3% in the pre-market. We need to push forward to the ECB. That decision coming in 1 hour and about 40 minutes time. Eric Robertson, Standard Chartered Global Head of Research, joins us now for more. Eric, let's start there. For the ECB, can I bring up that line that we had from Mr. Donovan over at UBS? Because that got my attention. The ECB has set itself a new inflation target to miss, and markets want to know how they intend to go about missing it. Would that be your take as well, Eric?
Well, I think that's a very good point. I mean, historically, the ECB has had a very difficult time meeting a price target that was at or just below 2%. So to move the desired inflation target a little bit higher, I think what it tells us is that they're prepared to look through the temporary inflation spike that we're seeing now, and will probably continue with, asset purchases and various forms of quantitative easing to try and build that credibility.
The U.S., Eric, has a boom economy. I believe Europe does not. Is it simply the structure that the ECB has to deal with, that they can't generate a boom economy to help out?
Well, I think that's part of the story, Tom. Look, we've been wondering about this disinflationary liquidity trap that Europe has been struggling with for a number of years. And frankly, we don't think that negative interest rates made things any better. If anything, it probably made it a little bit more difficult for the banking system. And so you have a world where policy rates are at zero, and the financial institutions don't really have a lot of incentive for distributing that excess liquidity to the broader economy. And I think for me, that's You know, people talk about the structural differences between the U.S. and the European economy, but for me, one of those differences is the nature of the financial system and the banking system.
There's a difference in fiscal policy as well in Europe. It just has not been as robust as it is here in the U.S. when it comes to that stimulus. When we're talking about monetary stimulus, though, and we think about the definitions of persistent and forceful, does that mean more stimulus or just stimulus for longer?
I think it means stimulus for longer. And look, let's go back to the decision to pursue the pandemic emergency purchase program, you know, which is a mouthful, but it's, you know, by our estimation, at the current pace of bond purchases, it's going to take the ECB until probably March of next year to fully utilize that PEP envelope. Now, the question is, if they're still struggling to achieve their inflation target, what do they do after that? Now, the PEP program gave them an enormous amount of flexibility, guys. It allowed them to buy bonds outside of the capital key requirements. Going back to traditional QE would probably have less flexibility, but it allows them to keep those purchases up for a longer period of time, and I think that's what we're faced with.
Well, Eric, the key word here is the E in PEP, emergency, and how we define emergency and how we'd consider the end of emergency and what that looks like. Eric, have you got any idea, and do you expect to get any answers in this news conference later?
In the short term, no. I don't think we'll get a lot of new information there. I think they will have to offer more forward guidance and sort of more verbal commentary about how they plan on achieving some of those new symmetric inflation targets. But I think this is really the challenge, right? I mean, it's the same thing when the Fed first announced average inflation targeting. Everybody said, well, it's one thing to talk about wanting higher inflation, but how are you going to achieve that? And I think that question or that debate is infinitely more challenging for the ECB than it is for the Federal Reserve at the moment.
Eric, good to catch up. As always, good to hear from you. Eric Robertson there, a Standard Chartered, the Global Head of Research. And Tom, let's just use the ECB's targets, their own targets and their own forecasts. So their new target is a 2% inflation target. Here are the forecasts. 1.9% for 21. 1.5% for 22 and 1.4% for 23. So Mr. Donovan over at UBS, when I read out that line, it might sound a little snarky, but the problem is, Tom, it's spot on. And it's been spot on for a long time. That take that this ECB, regardless of what the target is, they haven't been able to get there on a sustainable basis.
There's a hope of this, and what it is, John, is the behavior of what money does. Mr. Robertson alluded to that as well. I've been watching in the United States, John, this wall of money called overnight reserves. I don't pretend to be expert at it, but from a peak of $1 trillion, $1,000 billion, down we go, sigh of relief to 700 billion. And John, very quietly in the recent, say, 7 days, we're starting to creep up again. This is like in Europe. What do you do with the money? What's the incentive of all that government largesse to go out into the private system? It's not there.
You're teeing up the Federal Reserve for next week as well, Tom, July 28th. What are you looking for?
I'm looking for a long day on July 28th. What I'm looking for there, you know, it used to be easy. You'd see what sandwich Greenspan had for lunch. We've gone way beyond that. I'm looking for Chairman Powell to have a delicate press conference. And John, as you alluded to yesterday, also speak to the White House during his press conference.
Yes, we'll head down to D.C. and get the update on the White House in just a moment. That is 5-10 minutes away on this program. For our audience worldwide, here's the price action for you. Up a little more than 1/10% on the S&P, advancing 6 or 7 points. Yields for once. Some stability at 129.33 on 10s, advancing about 0.5 basis point. Alongside Tom Keene, I'm Jonathan Ferro, together this morning with Katie Lyons. It's a beautiful morning in New York City. Good morning. This is Bloomberg.
With the First Word News, I'm Laura Wright. President Biden is dismissing concerns that the U.S. would experience persistent inflation. He told a CNN town hall last night there would be near-term inflation because the economy is still improving. Still, he said that restaurants and others in the hospitality industry might take longer to recover because of hiring difficulties. Senate Republicans have blocked debate on the still unfinished infrastructure plan. They rejected Majority Leader Chuck Schumer's proposal to move ahead while negotiators struggle to complete details of the $579 billion package. Moderate Republicans say they need more time to fill in the details. They say by early next week, there should be enough votes to bring up the proposal. China is considering serious penalties for Didi after the ride-hailing giant's controversial US IPO last month. Regulators see the decision to go public as a challenge to Beijing's authority. The country's cyberspace administration had published back against the IPO. Among the possible penalties for Didi, a fine, suspension of certain operations, or the introduction of a state-owned investor. The actual COVID death toll in India could be as high as a staggering 5 million. Even the most conservative estimate, 1.3 million, would be more than double that of the US, which has the highest recorded death toll from the outbreak. The numbers range from 3 to 10 times India's official count. They were derived from research models and local government data. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg.
Sem se apresentar, as escolas estão começando a reabrir, os teatros não vão reabrir tão cedo. Aí a gente teve a ideia, no melhor estilo Minuto Nascimento, vamos levar a música aonde o povo está.
Minha missão hoje é fazer as pessoas sorrirem, cara. Sorrirem, olharem da janela, verem uma coisa inusitada, ficarem felizes, mandarem pros amigos e, enfim, curtirem um momento diferente, mesmo dentro de casa.
Surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Farrow, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
I've always sort of pictured what it was going to be like. I mean, you know, like the ride up there, the ride back. And I never realized that the whole experience was going to be so vivid.
But beyond sort of the satisfaction of your own goals being achieved, what does today symbolize for the company and also for all those children that were present earlier?
Well, look, for the children, we've just got to get building as many spaceships as we can, as fast as we can, so that one day those kids will have the chance to have a similar experience to what I had. And that we will do. We also launched this giant global raffle today, so that, you know, 2 kids for, you know, just $10 for a pair of tickets. If they could win the raffle, they can go up. But that money will hopefully enable many, many people to be able to go up who could never have dreamt of going to space.
I'm Alex Steele. It's a new race into space with billionaires, governments, companies, and investors all driving the industry.
Ignition, we got liftoff.
Space is what allows you to see over the horizon.
We're going to see another incredible leap.
The opportunities here are massive.
Join me and Ed Ludlow for Space Race, a Bloomberg Television special report.
Friday on Bloomberg Television and Bloomberg Quick Take.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
The vast majority of the experts, including Wall Street, are suggesting that it's highly unlikely that it's going to be long-term inflation that's going to get out of hand. There will be near-term inflation because everything is now trying to be picked back up.
The President of the United States speaking at a CNN town hall yesterday evening from New York City this morning. Good morning. Alongside Tom Keene, I'm Jonathan Ferro. Together, alongside us today is Kelly Lyons. Here's the price action right now this Thursday morning. Going into the opening bell, some 3 hours and 12 minutes away. Your S&P 500 looks like this, up 7 points. We advanced 0.16% on the S&P 500, following a really tidy two-day pop on the S&P, supported by higher yields over the last couple of days. 129.33. Still south of 130, but a real repricing off the lows of Tuesday morning on a 10-year yield. And going into that ECB decision, 1 hour and change away, Tom, euro dollar 117.92, just south of 118.
Euro dollar not giving me much, maybe a little bit stronger. Euro, John, I would note VIX from 25 into 17.62. That's not a record high VIX number, but it's getting there sprightly with Dow futures up 73 right now. On Washington and on July and the unseemly chaos of this summer, Anne-Marie Horton joins us from Bloomberg, Washington, and their correspondent there. Anne-Marie, the president talked about chaos on filibuster, but I lost count of the number of chaoses Congress is dealing with. What is the character of the messes down there?
I think there's three really, Tom. And the first one, of course, is the infrastructure package with Senator Chuck Schumer, that cloture vote to try to get it to debate. That ended up backfiring. But it does look like they are wrapping that up in terms of bipartisan support. And we'll probably get another vote on Monday. Senator Schumer himself had to vote no, so he could bring it to the floor again on Monday. That's number one. The second thing is, of course, the debt ceiling. We heard from the Congressional Budget Office yesterday that the debt ceiling goes till July 31st. That was decided last year. And now the Treasury, according to the CBO, has until about October, November in order to keep U.S. government paying its bills. And then the third thing, which I think is becoming a little bit more front and center, is the Delta variant and the spikes we're seeing around the world. And the president really talked about that last night at that CNN town hall.
We talked to Senator Hagerty yesterday of Tennessee. He made clear he's vaccinated, his mother's vaccinated. What can they actually do? What can Southern senators, and frankly, a lot of urban representatives as well, what can they do to get the variant and the unvaccinated going?
It depends who you ask, what direction would be the right approach. At this point, some people say that you just have to pay people to go get vaccinated, these other incentives. Another thing that states could do, and we are seeing it incrementally in certain businesses and universities, are requiring that you have to get a vaccine or you cannot enter. There was a very famous legal case in 1905, Jacobson versus Massachusetts, and this had to do with smallpox and whether or not it was legal to get a smallpox vaccine. And the Supreme Court said, yes, states do have this jurisdiction. It could become mandated. Potentially the administration want to give that up to the states, but that would be obviously the extreme case, and that would take a lot of political capital to do, but there are other avenues.
Well, let's talk about mandates elsewhere. Masking, Politico this morning, return of the mask, that's the top line. The Washington Post, White House officials debate masking push as COVID infections spike. Anne-Marie, this feels like we're going backwards a little bit with this conversation. What's happening?
Yeah, and Jerome Adams yesterday saying the CDC needs to do this, and he was, of course, the former Surgeon General, because he's just saying that there's no way to track whether or not an individual in the street or in a restaurant is vaccinated or not. And there's no mask mandate. If you're not vaccinated, people are still taking it up saying, well, there's no mask, I don't need to, and no one knows if I'm not vaccinated or not. There is concern in Washington, especially given this week we heard from Press Secretary Jen Psaki talking about there have been breakthrough cases at the White House, and the Washington Post saying that the White House is talking about bringing back a mask mandate. This will be politically very challenging, but it is something that there are discussions, not just in the White House, but also in Congress. But this would come from the CDC, but clearly the administration is having these high-level discussions.
For the administration, there's science, and then there are incentives. The CDC needs to focus on the science exclusively. That's what we expect from them. the administration needs to think about incentives as well. And Mayor Bill de Blasio of New York City is thinking about that too, Anne-Marie. If you start telling people who have gone out and got vaccinated they have to wear masks again and go through the next stage after that, perhaps, and the next step after that, where are the incentives just to get back to normal and go ahead and get one?
Well, the incentives have to lie with those who are not vaccinated. Those that are vaccinated know what the incentives are. Most of us can get on a plane. We can go inside restaurants or shops without having to wear a mask. The tracking is going to be very difficult. Incentives, they've tried a lot of incentives in this country. Lotteries, free tickets. I got a vaccine and was offered and given $25 to use in the drugstore to get it because I was a little bit later on in the year. And an older gentleman walked in and said, I got my vaccine 2 months ago. I didn't get anything for this.
Yeah, that was
so
me.
Incentives, I think, were, yeah, no, it wasn't Tom. Tom was in New York. But the incentives, I think, work to a point. Some people are refusing, and the administration is trying everything. They're sending buses to rural areas. You do see a lot of representatives and senators also out there trying to implore individuals to get vaccinated, but it might come to a point where they need to start discussing if there's going to be a vaccine certificate or passport, or just, like I said, universities or shops are not going to let people in unless they have proof of vaccination.
Anne-Marie, it was a week ago today that President Biden was meeting with the German Chancellor Angela Merkel, talking about how he was considering lifting that ban on Europeans coming to the U.S. We would have a decision in the coming days. It's been exactly 7 days, still nothing. Is the Biden administration in a position to do that, considering what is happening domestically?
It's a very good question, and we just don't know. We have not heard yet from the administration on the travel bans, but clearly this Delta variant, and they're even discussing bringing back mask mandate, is going to make it very difficult. One interesting research I read this morning is that there is research that 2 Pfizer jabs and 2 AstraZeneca shots do work against the Delta variant. We do know a lot of Europeans are taking up the AstraZeneca shot. Potentially that could help in this decision making, but we just don't know yet. The president really punted that decision down the line and has yet to come up with a decision on that travel ban.
What is several days? Is it a week?
More than 7.
2 weeks? Several days until you forget
1 or 2,
about it?
3,
Yeah, I think we're past several.
And it wasn't brought up last night. I mean, really last night he was imploring people to go out and get the vaccine, but travel really wasn't brought up.
Well, the Delta variant is here despite the travel ban. Anne-Marie, down in Washington, D.C. Thank you. Anne-Marie Hordern, Bloomberg, Washington correspondent. I want to turn back to the pricing issue, Tom. There was a line from Chipotle recently that jumped out at a lot of people. Quote, no resistance whatsoever to higher prices in the restaurant. It's not just about passing on higher prices. As you and I have talked about for a long time, Tom, it's about consumer price tolerance. And that tolerance seems to be pretty robust at the moment in America.
It is, with the GDP where it is. And, of course, there's decile analysis of that, who's being affected the most. This is all new, John. We forget how new and original this boom economy is. Anybody talking with certitude here is just, and I think Powell's captured that, frankly. There's a lot of mysteries out there. And one is, what is a $7 margarita at Chipotle going to do to me?
Can you get a margarita at Chipotle, Tom?
I don't know.
Have you ever been to Chipotle?
Can we test this theory out? I think we should.
We can go and do that after this show, if you like. From New York City this morning. Good morning. Alongside Tom Keene,
56th Street,
I'm
it's
Jonathan
6th
Ferro. Together with Katie Lyons. I think Chipotle's on 62nd, Tom. This is Bloomberg.
What does it change for your July 22nd meeting?
Well, we have a framework. We have a new framework that is unanimously approved by the Governing Council, and we're going to look at, as we always do every 6 weeks, we're going to look at the circumstances, we're going to look at what forward guidance we need to revisit, we're going to look at the calibration of all the tools we are using to make sure that it is aligned with our new strategy. And I think that, you know, given the persistence that we need to demonstrate to deliver on our commitment, forward guidance will certainly be revisited.
Does it give you extra tools? So on July 22nd, it's actually a bit, I mean, it was always a big meeting, but it's an even bigger meeting because it's not only something technically, right? It's not technical change.
You know, it's going to be an important meeting because, number one, we're going to communicate differently.
Up to Maine and had a lobster, and it's not as romantic as Lisa going to Greece.
Tom Keene says what?
You mentioned Maine and the lobsters up in Maine. Well, they can't compare to what you can see in Greece. Even better, I can't pronounce it. Astacoma carinata.
I nailed it.
It's not thera, whatever. Astacoma.
You're nailing it.
Carinata.
You're nailing it.
We're figuring out the hard stuff for you on Bloomberg Surveillance. Mornings on Bloomberg Television and Radio.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Live from New York City for our audience worldwide on TV and radio, this is Bloomberg Surveillance, and here is your price action. On the S&P 500, we advance once again. The biggest two-day pop coming into Thursday since the middle of May. Right now, advancing 7 or 8 points, up almost 0.2% on the S&P, up a little more than 1/10 on the Nasdaq 100. The Russell advancing too after a tidy rebound after a really messy couple of months for the small caps in America. We advance another 0.2%. It's about the relationship between this equity market and this bond market. Switch up the board. 2s, 10s and 30s. Yields have been on quite a trip over the last couple of days. The lows of the session on Tuesday, 112.60. The highs of the session on Wednesday, just north of 130. And to Tom's point a little bit earlier in the program, on what? Not much information in between, with the exception maybe of some long-dated debt coming to market, which was just a little bit messy. That's your bond market at 129.16, unchanged on the day on 10s, but a stability for once on 30s. Still sub 2%, 193.80 on a 30-year yield. Your attention, though, is going to turn away from this bond market towards the FX market very briefly in about 1 hour and 15 minutes time over at the ECB. Switch up the board and get to euro-dollar. Euro-dollar right now, 117.87. We were about one big figure north of this point the day after Francine Lacqua's interview with ECB President Christine Lagarde. And Tom, I wouldn't have been interested in this meeting if it wasn't for ECB President Christine Lagarde saying that we should pay attention because this one was somehow important. Let's see how important that is when we get that information a little more than an hour away.
Don't you agree with me, John, that German 10-year and Swiss 20-year are acting differently than the U.S. 10-year? They sort of have a life of their own.
So I'm going to bring up the Italian 10-year in the next hour, Tom. So just wait for that. That's the tease for 60 minutes' time. Just the development of what's happened with the 10-year yield and why that might be the ultimate target for this ECB and not that 2% number they're throwing around more recently.
We've got a busy section right now. Kaylee, I got to go to you on Southwest Air. This is important. Off United Airlines yesterday or the day before, Southwest hopeful to be profitable in 3Q and 4Q. Kaylee, there's a lot of that hopeful out there.
A lot of hopeful, but they are sounding decidedly less confident than United, that said they will be profitable in the second half of this year. United talking about a full recovery, at least in domestic travel. I wonder if Southwest is seeing that because they are just hopeful. They aren't sure, Tom, that profits are going to be coming this quarter and the next.
Manus Craney joining us now from Frankfurt. Manus Craney, always hopeful to get to a 3-hour lunch in Frankfurt. That's what they specialize in over there, and we welcome him today as he looks at the ECB. Manus, what will Christine Lagarde try to not say today?
What will she try and not say? Well, she'll try and not deflate the doves. She'll try and not allow the euro to fly away.
I think it's probably about freedom. That's what she's messaged to the market, Tom. Freedom, because this central bank is in a very structurally different position to the Fed, to the Bank of Canada, to the dissent of the Bank of England, and to the tapering that's going on at the RBNZ. So she does not want to say that they are anywhere near that consideration. They have more slack, they have higher unemployment, they've got an interest rate, they've got an inflation differential, which is wider to where you and Jonathan are sitting. You know, nothing is so permanent, John and Tom, as a permanent government program, read bond buying program. That was part of the note from Alberto Gallo a couple of weeks ago talking about stimulus. But in essence, that's it. What is the flexibility that they have? They want to communicate that, the flexibility in the emergency buying pandemic program that they have. And they want that to hopefully live beyond March of next year in size and scale enough to keep a cap on the euro and keep those yields, Jonathan, at 0.4%.
That's the big question, Manus. That is the big question. It's the E in PEP, the emergency. And once the emergency ends, how do we transition away from PEP? So, Manus, I wonder whether that new interpretation of their inflation mandate from below but close to 2% to just 2% enables the doves to get their own way. Is that enough?
Language is not enough in this case. Clunky language is something we've lived with for a long time. Put that to one side. This is about communicating what morphing from an emergency bond buying program is to in perpetuity, if you afford me that latitude. The 1.85 trillion should, in theory, mathematically be done by March of next year. With bond yields at 0.4%, however, they may not need to spend all of it. What will you morph and transfer into the bond buying program per se on an ongoing basis? That is where they have the flexibility. That is where they have the ability to cap the euro. That is where they have the ability to deliver the dovish message. Commerzbank chief economist was with me this morning. He presumes another $250 billion, or 250 billion if you think it sounds bigger, in terms of bond buying. So this, for me, guys, is all about the flexibility. And that should allay some of the fears of the hawks, because there was, of course, hawks on this committee that wanted to taper bond buying in the minutes of the last ECB meeting. So that's the risk.
Manus, we're running a bit of a book here. $10 that you're in shorts over in Frankfurt after what we saw take place in Zurich. What have we got? What's going on?
You have very posh guests.
Let's have a look.
When you have very posh guests, it's the full Mark Marango Savile with a little bit of Axel Aguito
loosen up, Tom.
For Italian
Manus,
style.
just tell him to loosen up. Tell your cameraman to loosen up a little bit, not come tight. Let you step back.
Apparently, you have to loosen up.
There we go. See? There we go. Very cool. Just checking in, Manus. I've seen you on your Euro tour. Oh, there the shoes. There are the shoes. Very nice. Manus Cranny.
You know, when it comes to matters of grave importance, gentlemen and ladies, style wins over substance every time.
That's why you're here with us, Manus. Manus Cranny, over in Frankfurt, Germany. Thank you, sir. Tom Keane, the always fashionable Manus Cranny, on his European tour from Zurich to Frankfurt.
A lot of value in Zurich, talking to the bankers that have to deal with this interest rate structure, also dealing with it, John Katrina Dudley with Franklin Mutual, with a lot of years of European investment experience. And she joins us this morning. Katrina, I love in your research note how you talk about the desire of smooth transition. That is a political process. Are we going to see a smooth transition?
I think we are going to see a very smooth transition. Look, let's be honest. We were all expecting this July meeting to be a complete non-event, but the strategy review actually came out much earlier than expected. And the signaling coming out of the ECB has been all about doing things, symmetrically, doing things consistently. And really, they're listening to the market, and the focus is on supporting the market and also supporting the economies of Europe. So I do think that we're in for a very smooth transition here. We're also, though, balancing the hawks and the doves in the ECB, and we need to be, thinking about what could happen at 7:45 when they release their statement.
Italian 10-year is 67 basis points. It seems to a lot of people, Katrina, that that's the ultimate target here, not this 2% number, but to make sure that financial conditions are easy throughout the whole of this cycle. Makes me wonder how stuck they're going to be with these so-called emergency settings for policy beyond COVID throughout the whole of this cycle. What are your thoughts on that?
I think you're really highlighting something that's so important here. For so long covering the European markets, we had something blowing up. And for once in our lives, we're actually looking at a very quiet and mild Europe. Greece seems to be settling in, and Italy is as well. Why is the market and why is the ECB focused on Italy? We had back in May kind of a mini increase in the interest rates or the yields on the bonds over in Italy, and they got scared because Draghi needs support. Draghi is turning around Italy, but in order to do that and in order to do that effectively, he needs the support of the ECB and he needs to keep those rates low. So I think that you're right that they are very much focused on yields, particularly in Italy and other countries in the periphery in particular. Think about all those names that came up in the press over the last couple of years.
Katrina, when Christine Lagarde walks up to that podium today and talks about the balance of risks, she's likely going to have to factor in the Delta variant. Do you see that as posing a real risk to growth, and how do you hedge against it?
I think that the Delta variant is more factored into European forecasts for growth than it is, say, here in the United States, where we really haven't, we're starting to see a spike in cases, but we really haven't seen the same impact. It's more of an issue in the UK, obviously. But Europe, generally speaking, has never been a fast-growing economy. So I don't think it's going to really, impede things. What we think it is that we're just so much earlier in the recovery in Europe. And also Europe has so much more flexibility given that it's early in the recovery. It has much higher unemployment rates and also has a lot more flexibility in terms of its ability through the European Recovery Fund to put money into the economy. And we're going to start to see that beginning next year. And that is incrementally going to be a driver for growth next year. And so I think we can give 2021 a bit of a pass in terms of economic growth, which is when the Delta variant would have the most impact.
Katrina, it's good to hear from you. Thanks for being with us ahead of that ECB decision in about an hour's time. Katrina Dudley there, Franklin Mutual, a portfolio manager. Looking at the chart of the 10-year, and we'll do a little bit of work on this a little bit later in the next hour, of the Italian 10-year. 67 basis points right now, Tom. At the high of the year, that was in spring, and what we saw is something north of 1%. And what I think is important here is what the Fed said and what the ECB did. The Federal Reserve said what this was a validation of a better outlook, not just for the US economy, but for the global economy as well. That's what they said about their high yields on treasuries. Yeah. What the ECB did was start talking about ramping up the pace of purchases in the near term, not the overall size of the envelope, but the pace of purchases, because they were uncomfortable with where yields were going in Europe. And that's why I just wondered, Tom, we talked so much about the inflation mandate over at the ECB, sub 2%. They're forecasting that out a couple of years still. What really matters is financial conditions for the periphery, for the whole of Europe, and you'll hear that again and again and again, I imagine, in the news conference in a couple of hours' time.
And I would go even further, John, not only to move to financial conditions, but I would just go simply to the desire for economic growth and to sustain it, which of course goes over to what the politicians care about, which is the labor economy. The arch issue here, and it shows, as we've heard from some of our guests, including Manus Cranny, the idea of every central bank for themselves. Some are getting restrictive, many can't.
And Tom, you're right to highlight the difference as well between what's happening in Europe and what's happening in the United States. We're having a very different inflation conversation in America that's not really taking place in Europe in a material way.
Yeah, there's no question about it. I mean, look at rents. Look at the house shortage.
Yep. Equity futures up 0.2 on the S&P. Yields advancing almost a basis point at 129.66 on 10s. From New York, this is Bloomberg.
With the First Word News, I'm Laura Wright. It's almost as if the pandemic and the battle between the US and China had never happened. The two countries are shipping goods to each other at the fastest pace in years. China is buying more from American farm goods, and US imports are described as being through the roof. But the US trade deficit hasn't shrunk. Most tariffs are still in place, and there haven't been negotiations over other economic issues. Meanwhile, China is pushing back against the World Health Organization's call for another probe in the coronavirus's origins. The issue, the WHO wants to know if the virus could have leaked from a Chinese lab. Beijing says there's no evidence for that theory, and it defies common sense. Bloomberg's learned that Federal Reserve Chair Jerome Powell has broad support for his renomination among top White House advisors. Still, the decision is expected later this year and hasn't been put in front of President Biden just yet. Powell was appointed as head of the central bank by President Trump. His term expires in February. It's a sign that travel demand is bouncing back. American Airlines is raising its goal for hiring pilots by 50% through next year. That's according to a company memo to pilots. American's new plan calls for hiring more than 1,300 pilots through the end of 2022. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Talk to the top about the mission as you see the evolution of fintech enabling what you call democratization. Do you think finance is becoming democratized, truly democratized at the moment? The fact that we're still having discussion about whether you can get in on IPOs, for example, are you feeling that the opportunities are there for anyone to be able to start to make their way within the financial world?
Look, there's always going to be progress to be made, but I think there are many brands now helping the unbanked and the underbanked, right? I think we've seen a lot of success in where digital disruption can really help with some of those groups. That's not really our target audience. We do want to offer great advice to everyone, but I think that there are a lot of other folks going after that marketplace. But there's always more progress. There's always more progress we can make. And sure, you're right. In places like private investing, and there are still sort of pockets of the market where you have to be in the know.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Global markets Pockets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, Early Edition. Weekday mornings on Bloomberg Television.
Came out with the pricing for the vaccine when we identified the lead candidate. We discussed early on about offering that at not-for-profit. We did not want access to or cost to be an issue for folks when they're considering getting vaccinated or not. That will come to an end probably towards the end of this year.
Joseph Wolk there, the Johnson & Johnson CFO from New York City this morning. Good morning. Alongside Tom Keene, I'm Jonathan Ferro. Together this morning with Katie Lyons. Lisa back with us this coming Monday. Here's your equity market, up 9 or 10 points on the S&P 500. Big two-day pop into Thursday. We add a little bit of weight to that rally on the S&P 500, advancing 0.2%. Yields pushing back to 130. Had a little look at that yesterday. Back at that level right now, 130 flat on 10s. Yields up around about a basis point, and in about 57 minutes time, an ECB decision. Euro dollar unchanged going into that, Tom. Euro dollar 117.93.
Absolutely. Now in the pandemic, and some clear talk here, we've really had a wonderful day yesterday in diving deeper into this Delta variant. Jennifer Nuzzo with us, Johns Hopkins Center for Health Security, and a senior scholar. Jennifer, I want to go back to April 26th. April 26th, the EU was really looking at letting American tourists into Europe. There was a better tone. Hospitalizations now, led by the unvaccinated, have returned to where they were April 26, and it is not a good trend. What is the character of those hospitalizations?
Yeah, it is not a good trend. I mean, it is a different patient population than had been hospitalized earlier in the pandemic. In particular, we have fortunately seen good vaccine uptake against the populations that are most likely to become severely ill, the older adults. And so now the people who are being hospitalized are younger. Although age is the single biggest risk factor, it's not the only risk factor. And so certainly people with underlying health conditions, and it's a list, it's a lot of people that fit in that category, but also even potentially people who have no underlying health conditions are unfortunately now being hospitalized. And it's so tragic because vaccines can prevent that from happening.
Jennifer, we used to talk about trying to achieve a 70% vaccination rate in this country. Can you compare and contrast the reproduction rate of this variant, the dominant variant right now, the Delta variant, compared to what we first experienced 18 months ago, and what that means for those kind of goals, whether 70% now needs to be 75, 80, etc.?
Yeah, I mean, it does likely need to be higher. The Delta variant is spreading much more quickly, and it's potentially spreading a bit earlier in people's illness, possibly when they're not even feeling much. So that complicates things. So the fact that if you're sick and you're out and about, you can infect more people than you would have with earlier forms of the virus just makes it harder for public health officials, to outrun it, to use other measures to try to control it. And that's why it's really important that we don't have to do that we can prevent those infections from occurring in the first place. And that's what vaccines are great at doing. Not perfect, but great.
Masks. That's the conversation down in D.C., Jennifer. You know it's back on the table. Politico this morning, return of the masks. The Washington Post going with White House officials debate masking push as COVID infections spike. If you've been vaccinated, Jennifer, what does a mask do for you? What does it do for others?
Sure. Well, listen, as I said before, the vaccines are